Hi there, and welcome to creating a three-statement budget model in Excel. My name is Dobry, and I'll be your instructor on this modeling journey. I have almost 15 years of experience in financial planning and analysis, budgeting, financial modeling and reporting, and in this course, I will guide you step by step through the process of creating a three-statement budget model in Excel. We will gather various information from different departments and use it to build a model of the company's performance for the next year. We will apply real-life techniques used by financial professionals when preparing budgets for large manufacturing companies. We will look into various methods to forecast performance and consider different ways to estimate our numbers. You will start with an empty Excel spreadsheet and build a comprehensive dynamic budget model step by step. You will learn how to organize complex models, how to build and link income statements, balance sheet, and cash flow statements, and format them professionally as we do in real companies. We will also take our model to a completely new level by implementing dynamic validation checks and different scenarios. This video contains all lectures from the course, and they are all organized as chapters down in the description below, so you can skip ahead and watch specific section that you're interested in. So are you ready to get into financial modeling and build your first three-statement budget? Then let's get started. Once again, welcome to creating a three-statement budget model in Excel. Before we get started, a little bit about myself. My name is Dobry for short. I have 10 plus years of experience, predominantly in financial modeling, budgeting, financial planning, M&A, different BI softwares, and data analysis overall. I've been a member of ACCA, the Association of Chartered Certified Accountants, for 10 years now, and I am currently a fellow of the association, FCCA. I also hold the Financial Modeling and Valuation Analyst and the Business Intelligence and Data Analyst certifications by the Corporate Finance Institute. In terms of learning objectives, we'll focus on creating a robust and dynamic model that has the three statements in it, the income statement, the balance sheet, and the cash flow statement. And we'll start from scratch, from an absolutely blank Excel spreadsheet, and build our way towards the full model. We will learn how to identify key drivers and assumptions, and we'll also look at really understanding the flow of information between the three financial statements, how the income statement, the balance sheet, and the cash flow statement all work together to provide the cohesive picture of the business performance. We'll also look at some tips on how to creating professional looking and pretty much ready to print budget models. We'll also look at different ways to forecast performance, and we'll apply some of those to forecasting sales, production, administrative costs, and other expenses. We'll also make sure that we're structuring and building our model in a way that keeps all this complexity really traceable and easy to read, meaning that if someone that hasn't been a part of building our budget will be able to understand how things flow together and how the entire model works. And hopefully by the end of this course, you'll have the confidence to go out into the world and create your own budget models and essentially bring value to any business. In terms of compatibility, the course is recorded with Microsoft Excel 365, and all functions of Excel that we'll be using should work with Excel 2010 and up from there. In terms of an operating system, I've recorded the whole thing on Windows, and the only difference would be that if you use Mac OS, the shortcuts for Excel are completely different, so you'll have to figure out those shortcuts. But if you're comfortable with working in Excel on Mac, you should have no problems to follow along. As for resources, you'll get the complete budget model in Excel that you can easily reuse. So even if you don't watch all the parts of the course, you can just watch specific chapters that you want to get deeper knowledge into, and then you can grab the final file and reuse it for your purposes. You also get an Excel add-in called Minty Tools. You get the student edition that has a few useful modeling features and tools that we'll be using throughout the course. Keep in mind, those are all things that save you time. So you don't need to have the add-in installed. I know that a lot of you are watching this on a company computer, and installing software on company computers is a bit challenging sometimes. So it's only something that would save you time, but you can do all the steps without it. And once we start working on the actual model, you'll be able to download the current state of the budget after each chapter. So you can look at the chapters in YouTube, and you'll be able to download the current state after each chapter. If you want to get in touch, you can post in the comment section, or you can send me a message. I'm mostly active on LinkedIn. And you can also find a lot of articles and resources that I share on Medium. And of course, you can always shoot an email to hi@mintyanalyst.com. Let's step into the next chapter. Okay, so before we start building this amazing budget model, we need to do some setup. First thing we need is the developer tab. So let's go to File and then Options, go down to Customize ribbon and check Developer tab. We're going to use that to create our scenarios dropdown, and we're going to talk more about that later on. Alongside the course, you're also getting the Minty Tools Student Edition add-in for Excel, which you can download from the resources, or you can always go to this URL and download it there. Keep in mind, you don't need to have the add-in in order to follow along with the course. It's just a bunch of tools that would speed up certain tasks, but you'll still be able to follow everything we do without installing the add-in if you're using the company computer or if it's just too much of a hassle. Download it, just run it, and Windows will probably tell you that Microsoft Defender Smart Screen prevented an unrecognized app, but if you go to more info, you'll see that there's a valid publisher. Just click Run Anyway. And here, once again, you can see the certificate of the publisher. It's still warning you. It's just the nature of Microsoft Windows. Just click Install, and that's it. And the best part is that it would regularly check for updates. So if one of you finds a bug, or if I decide to add additional features, it would automatically update. Should you want to remove it later on, you can just go to Apps and Features and look for Minty. And here you have it. You can press uninstall and it would remove it from Excel. Now, if you open Excel, you have this tab, Minty Tools Student, where you get a few features and tools that would speed up your workflow. The first one is Apply Formatting. It allows you to apply consistent formatting to all your tabs. So let's say our working title is going to be Financial Model. Just going to leave the positions. This is going to be Fin Model. And my company is Ackman. You can change those colors and they'll persist. Just going to go ahead and leave them as they are. Apply style. And you see, let me zoom in a bit. And it applies a sort of a header for the tab. If you apply this to each tab, you keep this consistency that makes it look much more professional, and it's much easier to read through the whole file. The way I usually do that is, let's say I have some dummy data here. I'll just add a bunch of lines. I'll add one column at the beginning, and then I'm going to apply formatting. A working title will be data selection, going to be data, and you see that my company name and currency persisted. Apply style, and it's formatted the same way. Other thing that you can do is, let's say we have quite a complex working here, and we can select various types of cells. So let's say I want to select all the cells with formulas, and I can get a better idea of which cells are formulas, which ones are inputs. I can also select all numeric cells, which would be my inputs. Select all text cells, select all the text in the tab, and also select all cells with errors. But we don't have any errors in here, so this won't return anything. Something else that we can do is numbers coloring, and this is really important when we're working on complex stuff, because let's say you've just finished this complex model, you know how everything flows, you know how everything works, but if you look at it 6 months from now, or if you share it with someone, they probably be lost in it. So it's quite a good idea to get into the habit of having a color legend for your files. I'm gonna grab everything all the way down to here. I'm gonna click numbers coloring, and you see that we can apply it to the selected range or to the entire sheet. I usually work with selected range because entire sheet would color my ears as well, and I don't want that. You can check which ones you want to format, and you can also change the colors here to match your preferences. That's the way I work. Formulas are black, values are blue, and external links, meaning links to other tabs and to other files, are in green. Just click Apply Style, and you see that all the numeric inputs became blue. All the formulas are black, and all the cells that link to other tabs are green. Next, you have Sheet Duplicator, and I know you can right-click and move for copy and make a copy of the tab, but the idea here is that, let's say we have this structure for a model. You can just go ahead to duplicate a sheet, and let's say I want to have 4 duplicates, and I want those to be called ABC, DEF, XYZ, and Acme. Click duplicate, and I have 4 copies of this model that I can start pouring data into. So let's say you've been working, you've zoomed in everything a bunch to be easier to check formulas and to see how things link to each other. Before I send the file, I like it to all be zoomed in at the same percentage down here, and I want it all to be scrolled to the top. I have this reset zoom here. You can just select multiple sheets, holding Control, and apply it to the selected sheets or to the entire workbook. You can type in whatever percentage you want, click Apply, and now it's all at 100%, and it's all at the top. Let's say I plan to work on it on a laptop. I'll just go 150, and so now it will be much easier to see what I'm working on. And you probably noticed I skipped this one, the table of contents. So let's say we've already have like quite a lot of tabs in our file. Just add a table of contents. I want all the worksheets to be included. I can add the sheet name, the table of contents name. It can either be a new one, or subsequently, if you want, you can edit existing table of contents. All those are the same, and this is an important section where you can add a link back to the table of contents. And because on the apply formatting, we left it at B2 for the sheet name, that's why we can now move from B2 to get the sheet name reference location. And we can place a backlink in B1. Just click Add Table of Contents. I now have this table of contents. Let me zoom it in a bit, where I can just, let's say, click on numbers. It will take me to the numbers tab, and I can click back to table of content up at the top. And as soon as you, let's say, you remove a tab, you can come back here, table of contents, and it automatically selects that you're on the TOC tab, table of contents. And now this tab Acme is no longer available here. Just click update, and it's going to remove it from here and update your table of contents. That's pretty much it. You can do all of those manually, but it would save you a lot of time if you can have the add-in installed. I know a lot of you would be taking this from a company computer. Usually you won't be able to install software on those, but I strongly suggest you get in touch with your IT department and ask them to install the plugin for you. Budgeting is essential to ensure that we form a proper long-term strategy for the company. It helps us to enforce spending control within our business, which leads to proper planning and the company having a much clearer business objectives to achieve. Budgets can serve as a plan of action for the management and also as a reference point for performance evaluation. They make it much easier to identify challenges and to ensure the company has the liquidity to face those challenges, especially in the short term. Budgets make sure we allocate the proper funds to the strategic objectives of the business. Budgeting is one of the most crucial tools that we have at our disposal in order to properly navigate the business. It's a framework for the company's finances, and it ensures that all departments within the firm have aligned goals. Budgeting is an integral part of developing the business. Creating a budget also gives us some peace of mind. It is good to strive to avoid getting lost into too much detail when we are preparing our budgets. We would usually add scenarios to allow for flexibility of our budget model. So basically, this would show us what would happen if our set of assumptions changes. And we're going to look into that when we're building our model. The budgeting process is actually a cycle. It has a start, but has no end. So we budget, we perform analysis, we take action, and then we budget again. A regular variance analysis is key to evaluating performance of the business. We do that by preparing flexible budgets to evaluate our performance. We apply the same assumptions from our budget model, but to the outputs from the actual performance of the business. There are a few budget types. First is the master budget. It's a forecast for the company as a whole, what we usually refer to as a three-statement budget. It includes the income statement, balance sheet, and cash flow statement, and this is actually what we're going to be building in this course. Then we have a static budget. It's like a forecast that looks mostly at fixed costs and capital expenditures. We have our operating budgets that focus on revenue and expenses from the day-to-day operations, including the cost of goods sold, overheads, admin costs, and other performance measures that are tied to the activities of the company. We also have cash flow budgets, which forecast the cash inflows and cash outflows, focusing on when they'll happen to assist liquidity management and assure sufficient funds are available to the business. We also have rolling budgets. Those are regularly updated to add another period so that we always have the same future outlook for the company. As an example, every month we prepare our monthly reporting and then add another month to our budget, and that way we always have a 12-month budget ahead. Some of the most notable benefits of budgeting for the company is that we get continuous tracking of the business performance by performing variance analysis and different performance evaluations. Budgeting aids our long-term strategic planning. It also significantly raises the attractiveness of the business for investors when we can show them our budgets and how we manage to perform against our budgets in prior periods. So it makes it easier to set goals for the department and for the business. It also tremendously improves our options to get financing and credit, and it allows for regular reporting where we can compare our performance to the budget. In summary, budgeting provides guidelines to help managers in making informed decisions. It helps with performance evaluation, and it's crucial to set our company for success. Budgeting is an integral part of running an efficient business. Okay, that's just a brief look at what budgeting is and what are the benefits of it. And you can find more information in the attached resources. Okay, let's take a look at some functions that we're gonna be using a lot throughout our model. They're pretty basic, so if you're already familiar, you can skip this video. First one is sum. You can either type it in or you can use out and equal sign, and it's gonna select everything above or to the left automatically. So pretty much it just sums the numbers. Next one is SUMIF and SUMIFs. Those are both conditional summing, and SUMIF is a bit weird because you have to switch between different sheets more times if you want to sum from different sheets, but therefore we always pretty much use SUMIFs. Let's say we want to have a total of all the transactions that are in euro. Type SUMIF, tap to open the brackets. We need the range. This is our criteria range. And our criteria is going to be just to the right. And our sum range is this one. And you see that first you got to select the criteria range, then the criteria, and then the sum range. And if those ranges are in a different sheet, you have to go to this sheet, select the criteria range, go back here, select the criteria, go back there, select the sum. And that's why we usually use SUMIFs, which starts with the sum range, the criteria range. So you're still in that other sheet, and then you just come back here and select your criteria. Okay, go ahead and look at VLOOKUP. VLOOKUP lets us pretty much look up values in another table. So I have the currency names here, and what we can do with VLOOKUP is typing the formula. The lookup value is going to be our currency code. Then our table array, where we're going to be looking, going to be this thing here. You can select the table, but don't forget to fix it with F4 because it's going to be moving down as you copy the formula down. So it's much easier to just select the whole columns, and actually see a preview here. It says how many rows and how many columns we're selecting, and we know that our index is the second column. We want to be getting from this column, and we always use 0 here or false because we want an exact match, not an approximate match. And that's our function. We can copy it down with Control D, and we have all the currency names. Next thing is average. Going to be using that here and there. Let's say you have a list of sales and you just want to know how much on average is one sale giving you. Is just a simple average function that sums everything and divides it over the number of instances. Okay, so 1561. Now you actually check that. If you just select them, you see the average down here, the count and the sum. So basically the function gets the sum, divides it over the count, and arrives at 15.61. Again, next thing, a pivot table. Pivot tables are really useful when you want to review information based on different categorical values that it has. So just select the whole table, and you see here that we have the currency name, the credit card type, and the stream, whether it was purchased online, purchased through third parties, or purchased from our shop. And just by going to Insert, Pivot Table, and you can either create a new sheet, but here I'm going to just put it in this sheet. Okay, and here's our pivot table. What we can do now is we can take the transaction value, put it here, and we can look at that summarized by credit card type, and you see the numbers here. And you can also, let's say, divide it by stream within all the credit cards, or leave just the stream. It's pretty useful when you want to quickly organize data and look through it. Next is the if function. So here we know that we have to pay 2.5% commission on all our third-party sales. So let's just go ahead and use an if function. If this equals, and I'm just going to type it in here, third parties, between quote marks. You can use a cell that you can select, and the value, if true, is going to be this, fixed with F4, so it won't move when we move the formula, multiplied by our transaction amount, and otherwise we want to get a 0. Okay, let's copy that to the bottom, format it, and you can see that everywhere that we have third parties, it's now calculated our commission on those transactions. And just to throw in another formula here, so let me just add it, round. Here, when we calculated our commissions, you can see that if we show more digits, we have 3 digits somewhere. And if we have to deduct that from an invoice or something like that, we need to have only 2 digits after the decimal point. So let's just take this whole thing and add round around it. And I'm going to round to 2 digits after the decimal point. Copy that down, and you see now that everywhere it has been rounded to just 2 digits. You can also use round up and round down, and the way to use those is if, let's say, we have 1.4 and you want to round everything up. This is useful when you're calculating, let's say, you need to model something related to employees, and you need a number of employees, so you can never have 1.2 employees, and you'll never round it down because you need more than 1. So what we can do is we can use round up 0, and it will always give us upper one, and round down works in the similar way, but just rounding it down to the nearest below. Give us 1. Okay, and the last one is choose. We're going to be using this in our scenarios functionality. So basically the idea is that we input a type here and we want to get the appropriate action here. Just going to type in choose. This is our index number, and then we just have to list all the values that we can select from. Oops. Okay, and it gives us a value now because there's nothing here, but if we say 1 here, it's going to get the first one, sell. Type 2 is going to be buy, 3 hold. And we can use this to add like a drop down and pick our scenarios, and they will update in our home model. What happens when you type a 5? It's a value here. So let's add another formula called if error. What if error does, it gets a value, and if this value is false, gives another value. So our first value is going to be our choose formula, and our second one is going to be NA, not applicable or not available. We're going to close that, and now anytime this is not proper, this is going to turn to NA. Okay, that's it. We're going to take a look at the most common Excel shortcuts that we're going to be using throughout the course. So the first one is F2, which allows us to edit a cell formula, and then we can click escape to get back. The next one is F5. F5 is really useful. Press F5 and go to special, and we can select constants, and we want only numbers. Select all the cells that are just constants in the sheet, which is really useful when we want to check if we colored everything properly. The next one is Control R. So let's say we don't have those here, but by taking the selection with the first cell containing our formula and clicking Control R, performs fill to the right. The next one is Control D. It does the same, just downwards. So if, let's say, a total here, and we don't have the other 2 totals, the whole selection with the first cell being the one we want to replicate, Control D copies down the formula. Next thing is Control Enter. Let's say we want to type the same thing. We're doing a mapping or something like that. So write cache in all of those. If you press Control Enter, it's going to fill the whole selection. It's moving around. So by pressing and holding Control and using the arrows, we can move to the end of the selection. Skip to the next, go to the end. If we use Shift and the arrows, we just highlight cells. And if we combine them, Control Shift and the arrow, we can go to the end of the table. and if you press down, you can go to the bottom. It's an easy way to move around. Then Shift and Space will select the whole row, and Control and Space will select the whole column. This is especially useful with the next one. So we select the whole column by Control and Space, and Control and plus. Keep in mind that if you're using the plus above the equal sign, this is going to be Control Shift, and this key would add a new column. And the same way, if we have selected the whole row with Shift and Space, we can use the same combination to add a new row. And Control minus will delete the selected row or column respectively. Probably the most important key is the Alt key. So by pressing the Alt key, you can see that you get all those numbers and letters up here. And this means that if you want to go to the Insert tab, you have to press N after you've pressed the Alt key. Let's say we have this and we don't see the numbers. You can just use Control Space to select the whole column and type Alt H to go to Home, O to go to Format, and I to use Out to Fit column. It seems like a hassle, but once you start looking through the menus doing the Alt key combinations, really soon you're going to learn them by heart, the ones that you use the most, and you're going to be using it all the time. And probably the best part about Alt is that you can add quick keys up here, and by using Alt 1, 2, 3, 4 to however many you add, you can use those. Let's say the ones I use the most are, say this is a number, and as you can see, my second one, Alt 2, formats it, and Alt 3 takes care of the digits after the decimal point. Okay, that's it. Those are the shortcuts that we're going to be using all the time. So I suggest you probably go through this video 1 or 2 times and get really familiar with them. Okay, let's take a look at the resources that we're going to be using to create our model. So first here we have the sales breakdown and BOM calculation. BOM is bill of materials, so pretty much the direct material cost. And this is our sales plan that we got from our sales department. You see we have the price, the month, the client, the item that was sold, the quantity, the total sales, the direct materials that go into it, and we also have some commission and early payment discounts, which differ from different clients and different items. We're going to use that to create our sales budget for 2021. Next thing we have is a financial summary in 2016 to 2020. So here we have our income statement, our balance sheet, and our cash flow statement for the past 5 years. And we're going to be using those to navigate our modeling efforts, and mostly to calculate our working capital schedules. We also going to be using all the closing balances from here in our calculations for the closing balances as of the end of the year we're forecasting, 2021. Next thing is just a simple one-line summary of the quantities that we plan to produce. We need that in order to calculate the overheads distribution and be able to calculate our cost of goods sold. We're going to look into that a bit more. We have our salaries budget. So here you see we have it in 2 different ways. So for the production payroll, we have the gross salaries, and then we have to add the social securities, because almost nobody is above the limit for social securities. And here, because we have people with higher salaries, we've just asked our HR department to calculate those costs on a total basis with the expense for the employer, for us. I'm going to look into that a bit more when we're calculating our salaries within cost of goods sold and within our administrative expenses. Here we have our operating expenses. So those are all expenses that go into admin, selling, and cost of goods sold. This is something that we usually get from the department heads. We have the department heads here. different departments, and we've used the accounts. So those are from our accounting software, the accounts that correspond to the account here. And what I usually do is I'd export that for the last year and ask the people to look through it and update it for next year. So we have all those here. We're going to map those and use them to calculate our admin and selling expenses and our overheads. Next thing is our capital expenditures budget. We're going to be using that to calculate our property, plant, and equipment schedule and our intangible asset schedule. The company that we're looking at, Acme Limited, has an investment loan that they signed in 2012. And we can see here the repayment schedule. We can see that it's active till July 2021. So we'll have to take notice of the interest here in our income statement and the closing balance for our balance sheet. And we're going to use the schedule to also separate it to a long-term and short-term portion. Here we have a breakdown of our monthly sales for 2020. We're going to use that in our working capital calculation when we calculate the 12-month sales and 12-month cost of goods sold for each month. Going to look into that a bit more. Don't worry if you're not getting what we're going to exactly do with that. And last, we have our bank covenants, and we're going to include in our model, we're going to include calculations to check if we're meeting our bank covenants for the year that we're budgeting. Okay, those are the resources that we're going to start with. And next thing, we're going to open an empty Excel spreadsheet and start working. Okay, we're starting with an empty Excel as promised. We'll be adding a lot of sheets, so it makes sense to have a place where all this is organized as a table of contents. And let's just format one sheet first. Working title will be Budget 2021. This will be our main sheet. The worksheet name will be Budget 2021. Type in your company name here and it will persist in the following times when we use the apply formatting. I'm going to hit apply and let's just zoom this a bit. So this will be our main sheet. Here we'll be building our entire budget. So the income statement, the balance sheet, the cash flow statement would all be here. And then we can start building our table of contents. Just going to add it through the function here. So I'm going to use add new. And I'm going to rename it to Budget 2021 Table of Contents. And I want a small O for the TOC. I'm going to hit Add Table of Contents and I'm going to close it. And the good thing here is that this would go and add this back button, Table of Contents, at the top of all the sheets that we have. And it would use the name here as the working name here. Just zoom this in a bit as well. Okay, next thing we have is our sales breakdown and BOM calculation, the one we already discussed, our sales plan. Let me just bring that over to our budget working file. And let's start building a summary because this is not a really user-friendly format. Apply some formatting. Sales budget, sales BU, and Acme Limited. Okay, so the way we're gonna format this is I wanna have different sections giving me different information on sales. So the first thing we're gonna need, let's say how we're gonna structure it. We're gonna have our client number, we're gonna have our client name, and then we're going to have our information per month. So January, and if you just click that and drag it, it's going to fill it with the names of the months to December and a column for total. The way I like to format those is using white color text and this really dark blue. And I'm also going to bold them. And then let's just make sure we have enough room for everything.
And let me zoom that to 160 so it's easier to see. Okay. In order to get our client numbers and client names, we can actually use a pivot table. We can come here and actually use it just for the client code and the client name. Select all 500 lines and then just go to Insert Pivot Table. Client code and client name. And to make it appear a bit more usable, make it show in tabular form and remove subtotals. Okay, what I'm going to do now is copy those and just bring them over here and paste them as values. I don't need this pivot table anymore, so I'm going to delete this sheet. Just used it to summarize our client numbers and client names, and now we're going to use some formula to calculate the amounts of different metrics. Okay, now that we have those, I'm going to add a few blank lines here because I'm actually going to leave this header on top at all times, and I'm going to freeze panes below it. That way, on my sections, anytime I'm somewhere in between, I always have the headers here. And my first section is going to be gross sales. What I like to do is actually number it, and that way when I have different sections, you can go with control and the arrows, you can go between sections. And I'm also formatting those all the way to the end with a really bright orange, this one here. That would be really noticeable, and I'm gonna bold it. Actually need another line here, and now I can just copy this over here. But one thing I'm going to change is I'm going to use numbers instead of the names of the months, because that way I can use those in formula references. I'm just going to use +1 to increase the months and copy the formatting, and I'm going to drag that to the right. Okay. Something else that we need to do is create a total here. Total gross sales. And this is actually the line that we're going to be using in our income statement. It's going to equal the sum of those. Remember not to include the number here. Actually, right now, it's not going to make much of a difference, but it would still show as a deviation, and it's going to be really hard to track it after that. Just format this and copy it to the right. And I'm also going to need some totals here. This sum to January. And drag that down. And format it. Okay, let's both those and let's both these. And now for the fun part, what we're going to use here is a simple sum-ifs formula. And we're going to sum from the sales breakdown, and we're going to sum from the column sales. Those are our gross sales. And I'm going to log that because I don't want it to move. I always wanted to use this column. And our criteria range, our first criteria range is going to be the client code. And I'm also going to fix this one as well. And the criteria for that is going to be my client number. And I want to fix only the column. I want it to use the same column as it goes further to the right, but I want it to be able to change the rows when it goes down. So just gonna freeze the column. And then my second criteria range is gonna be the month. And I also want to fix this one. Always wanted to use this column. And for the, oh, that was a problem. Should have hit the, okay, just delete that. So we're up to here. We selected this one. And then just go back to sales breakdown and select our month column. Fix it again. Then add my comma and go back. And I want my month to be this one here. And this one I want it to be able to move to the side, but not down, so I'm gonna fix the row. Close my SUMIFS formula, and if everything is written correctly, you should be able to bring that to the right and then bring it down, and it should work as a churn. Again, let's just check it quickly. My total is 645 million and my total is 645 million. So our formula are correct. Again, apart from the gross sales, we'll need to calculate our net sales, and this is net of early payment bonuses, because our early payments here, they're going to be deducted from the line of sales in our income statement. In order to do that, we first need to calculate our early payments here. So let's remove my filtering and just call this column early payment bonuses in euro. Format it like that. Just extend it a bit. And it's pretty much going to be my early payment percentage multiplied by my gross sales. All right, let's bring that down. And we can just go ahead and calculate our commissions as well, since we're here. I'm going to use those later on when we're preparing our expenses, and those are going to be in the selling expenses, and they're going to be the percentage of commission multiplied by the gross sales. And let's also bring that down. Add some totals. And that's it. We now have our early payment bonuses, and we're gonna need to try to move them over here so that we can calculate our net sales. And in order to do that, I'm gonna just go ahead and just copy this whole thing, my whole section, and paste it right below. Call this section 2 and call it early payment bonuses. Change the name of my total. Okay, let's see. This one is referencing here correctly, but it's still stuck to the top here, but just drag it down and it's going to be fine. And the next thing we need to do is remember where we're summing from the sales breakdown sheet is column J, which is our sales. What we can do now is just manually change the formula to sum from column Q, which is column P, which is our early payment bonuses. And maybe this should work. That to P, copy to the right, copy down, and we can see that only 3 clients have early payment bonuses. 11,119,000 and let's see, 11,119,000. Okay, so we did that correctly. Time for our next section. What I want to do here is calculate the net sales. So just gonna copy that down here, paste it in that section 3. Net sales. That's gonna go to the income statement. Total sales net of early payment bonuses. Extend that a little bit. Our formula here is gonna be our gross sales for month 1 for client Zava minus our early payment bonuses. Copy that to the right and to the bottom. 634 million. which is our 645 gross sales minus our early payment bonuses. Again, make this a little bit smaller and maybe drag this one as well. Okay, so we now have our net sales that we can include in our income statement.
Let's leave our model for a second and look at additional forecasting options, because as you probably noticed, we didn't forecast our sales. We already had a prepared sales plan, and that's what you'd usually get in big companies, but sometimes you need to forecast performance, either sales or some kind of expense, without having anyone else to provide you with data. So the easiest thing to do, and it's most popular when you're forecasting smaller and not so significant items, is just to use a linear forecast, a formula that you get in Excel, and it pretty much applies the least squares method. It's a statistical method. I'm going to leave some more information about it attached as a resource. It asks you for the X that you're looking at. So this is going to be our X because, it's a function of Y equals function of X. So our X that we want to calculate for is this period. Our known Y's, our known results of the function, are our sales, and I'm going to fix that. And our known X's are our known periods from before, and I'm going to fix this one as well. Okay, we can just carry that down. I'm just going to transfer that so it look better in a chart that we're going to add. Okay, and that's our chart. And you see here that it's pretty much like an average of how it was moving, and we can make sure that it's so by just adding our trend line. By adding a trend line and picking a linear trend line, so employing the same method, we can see that it matches our forecast function result perfectly. What we can do when we add a chart is we can display the equation, and this is the equation actually used to calculate those averages. We can also display our R squared. R squared, the closer this is to 1, the better the trend line fits the data. And we can see that it's close to 0, which means that due to our seasonality, our trend line doesn't fit at all. You can use those to calculate the forecast as well. We can just type in 6.9436 multiplied by our X minus 27,9651. And this is going to yield the same result. Well, we see that it's not exactly the same. This is because those numbers up here are a bit rounded. If you want to calculate them properly, you have to calculate your slope and intercept. And your slope is the multiplier before X, and your intercept is this value here. So just use the slope function. The known Y's, our known Y's are our sales, and the known X's, are our periods. Okay, you see that it has a bit more digits after the decimal point. And the same thing with the intercept, our known Y's, and our known X's gives us our intercept. We can actually use this to get a bit of a more proper calculation. So we're going to have our X, the period, multiplied by our slope plus our intercept, and fix that as well. And you now see that we get the same result as the forecasting function yield before that. That's one way to forecast. I would recommend it for less significant items or items that have no noticeable seasonality. And of course, items where you have no assumptions for changes. Let's look at another option, a moving average. A moving average employs the average function, and we get to select as many as we want. I would usually just go with a year, or maybe go for the full data set that you have. In order to actually use the moving average, it's important to notice that at some point it starts using empty cells here. So just gonna make it like that. Make this equal to those. You can just calculate this here if you don't want to separate it. But what we can do now is if we add a chart, gonna see that it's a bit better. It follows the seasonality a bit, but it's still no way near being proper enough. Probably the best way to forecast such performances or sales or expenses or whatever is to use a forecast sheet. And the forecast sheet is a really cool Excel feature that many people don't know about. And basically, the way it works is we just select our periods and our values and go to data. And here under forecast, you have your forecast sheet. And it's going to pop up. It's going to give us some options. It's a good idea to go into the options. You can see that it detected properly the end of our forecast because just sees that those are 2 years and it just adds another year. If we had like 5 years, it would just add a 6th year. So we can change that if we want. The confidence interval, those are those two up here showing us the error that's acceptable. And the important part is this one here, seasonality. So detect automatically or set manually. We know that our seasonality is every year, not every 6 months. So you see this here. If we change this to 12, it starts to match much, much better our performance over the past 2 years. Just hit create and it's going to give us a chart showing us our confidence intervals and our forecast. And this here is our forecast, which would be more applicable in this current scenario. Okay, let's look at how we might have approached our sales forecast if we did not have our prepared sales plan. First, what I want to do is I want to get the financial year 2020 sales revenue. January to December. You just format this whole thing. Our blue and our white, and let me just hide that. We don't need it. Just go to our monthly sales from our resources and copy that. Now that we have our sales revenue for last year, what we can do is we can start calculating our seasonality. And in order to do that, there's a really simple way. Just gonna get the average here. Make this orange and black, and let's go to those. And by having this average, we can see how much each month deviates from it, and this is going to be our seasonality. So this divided over this, fixed with F4. And let's make it a percentage. Move that to the side, and this is going to help us adjust for seasonality. So now we need to start adding our FY 2021 prediction. This is going to be our 2021. Okay, I'm not going to call it prediction. I'm going to call it forecast. And we have the months and the average. So how are we going to get the average? That's the idea, to get the average and use those seasonality percentages to calculate the monthly. Sales revenue. Forecast. In order to do that, we're going to use a simple forecasting method to figure out how much should our sales for 2021 be as a total. To do that, I'm going to head over to our financials, and I'm just going to copy my sales from here. And let's just place them over here and color them blue so that we know they're constants. Okay, gonna need this header, and this is our sales for FY, 2016. Okay, 2016. And this is gonna be this +1. And let's forecast our 2021 performance using a simple linear forecast. Forecast linear, and our X is 2021. Our known Y's are our sales for the past years, and our known X's are our years. Okay, so based on a simple linear forecast on an annual basis, we get 669 million revenue. So our average is going to be this divided over 12. It's for 12 months. And this would let us use the percentage here of our seasonality and multiply it by our average fixed with F4. And this will give us our monthly sales for 2021 at 669 million, just as our forecast here. The next thing we can do is, if we know that something is going to change this year, we can add some additional assumptions. So we know that we're going to have an additional promotion that's going to run in June in order to maximize sales, even though July is really strong because it's summer. And we expect this to give an additional 1 million of revenue. So we're going to have sales adjusted here. Just format that a bit better. And this is going to be a sum of those two. Carry it over. And our total is going to be 670 million euro. That's a perfectly fine way. We can add a bit more adjustments, of course, if we know, if we have some additional assumptions. But even if we don't have anything else, this is something that we can go from if we don't have a sales plan, and it's going to be reasonable enough for the purpose of our budget. Something else that I would like to do here is I would like to actually compare those. Just select those here, and my forecast. Oops, actually no, I had to select my adjusted forecast. And just to make sure that we're following the same seasonality, let's set a chart and just look at it. And yeah, we can see that here it rises a bit. This is due to our assumption. But apart from that, we just follow the same seasonality as in the prior year. The next thing I want to do is, let me just look at the sales that we calculated in our video, in our budget. Just gonna carry those over here, color them blue. And what I want to do is just want to see how our sales plan deviates from what we would have calculated if we didn't have the sales plan prepared. So I'm just going to link the adjusted sales here. And let's add a deviation. Okay, we can see that as a total, we would deviate with 35 million, which is quite a lot. So our sales plan is actually lower than our forecasted sales. And this might have to do with the fact that we're expecting to achieve the same growth here. Maybe if we just knew that we're expecting, let's say, a 5% growth, and then we can change this, multiplied by 1 plus 5% or 1.05. We're going to see that this falls down. So it's not even 5%. We're expecting to pretty much keep sales the same. But yeah, just wanted to share a few other options to forecast. This doesn't apply just to sales. You can apply it to anything from movements in balance sheet accounts to all kinds of expenses. We already have our expenses modeled by our heads of departments, and that's the common case especially in bigger companies. But in case you don't have some of the lines from your income statement provided by someone, and you have to calculate them and you have to forecast experience, those are the ways you can do it. You can use a simple forecast. You can use moving averages. You can use a forecast sheet. I pretty much almost always use this when I have like completely no idea for some line that I need to forecast. Or you can calculate it like this and just apply seasonality. Let's head back to our model.
We made a summary sheet of our sales with our gross sales, our early payment bonuses, and our net sales, which are going to be used in the income statement budget. So let's go to our budget sheet and actually let's just copy over this heading. And won't have a client number and a client name here. Just extend those a little bit. And I'm also going to freeze the panes here. The first section that we'll have in our actual budget is going to be our income statement. We're going to add some assumption sections after that. But for now, let's just start by doing this. Okay, we're going to use the bright orange, bolded, and this is going to be our income statement. We can just copy this from here as well and just delete those, as those are going to be our line items. And we can start typing our income statement lines, but we might miss something. So to make it a bit more consistent, we're just going to use the financial summary that we have from our starting point, which is we're just going to use the skeleton from here. So I'm actually going to go ahead, select all the lines, even with the summary here. I'm going to skip the balance sheet for now. And just for the sake of copying over my formatting and making it really consistent with prior year financials, I'm going to copy also the first period. And going to paste those here. Basically extend that a little bit. Actually, a little bit more. And this one here as well. I'm going to go ahead and delete every number that's not a calculation. But this way, I'm going to have the formatting and all the total functions properly here. Okay, those are formulas below, but this one I can delete. And also going to select nothing and carry it over all the way to my total column. And now we can finally link our net sales here. I'm going to go to the sales budget, sales, early payments, total sales net of early payment bonuses. Again, copy that over and add a total. And that's it. Just add totals on all the lines. Again, that's it. We now have our structure for our income statement, and we already have our monthly sales for our 2021 budget. Okay, we already linked our net sales. Now it's time for our material cost or our bill of materials. We're going to go here, copy this whole section. Paste it here, section number 4. direct material costs. Total direct material costs. And what we need to do here is actually, we should have copied this one over here. Just go ahead and paste that here. And the first thing we need to do is bring down this. It would still work, but I prefer it to be using the proper month. Okay, and the next thing we need to do is remember this P that we are referring to, the column. Let's see which column do we need. So we have our BOM calculated in column L. Let's go ahead and change column P with column L. And this should do it. Copy to the right, copy down, and 492 million, and that's it, 492 million. Okay, now that we have our direct material costs, we can link those to our budget, and remember that we need to link those with a negative sign because it's a cost. And this one, and just bring it to the right and make sure that we can see everything. You see that all the negatives are formatted with red. That's achieved through the custom cell formatting, but since we used our prior financials, we already carried the formatting over. But if we press Ctrl+1 and we see that it's a custom with a red in square bracket, so that's how we achieve that for the negative signs. Okay, the only thing that's left that we can do in our sales budget and from our sales breakdown is summarize our quantities. And you remember that at the end of the income statement, we need the number of items sold so that we can calculate average price, gross profit, and EBITDA per item. So let's go ahead and do this one as well. Just copy this whole section. Section 5, and I'm gonna name it sales quantities. Sales quantities, and the same approach, go to sales breakdown, and you can see that our quantity is in column I. So the only thing we need to do is first move our month down so that it would pick the month from this breakdown, and then change the column L to column I, which is where our quantities are. Copy that to the right. Copy it down, and we get 244,631, which is exactly the quantity in our sales plan. Okay, now that we have the sales quantities, just go ahead to our budget and we can link them here. Okay, now we have some average prices already. Great. And next thing we need to do is look at the production staff cost and the other production costs, which together with the material costs are going to give us our total cost of sales. Okay, next line is our production staff costs that are included in our cost of goods sold. And to do that, let's add a new sheet and just zoom it a bit so it's easier to see, and apply our formatting. And this is going to be our production, payroll, and overheads calculation. production BU, Intercompany. Okay, so first thing we're gonna do is add our months here. December, and then a total, and format those with our dark blue and a white font color, both them, and just free space below. So we're gonna have a few sections here, and the first thing we need is to understand that in order to calculate the production overheads and payroll cost in cost of goods sold, we need to know which goods are going to be sold, because the expense that we're going to have for salaries during the year is the expense to produce the goods, and not necessarily the expense that goes into the sold goods. For budgeting purposes, what I usually do is I get an estimate of the monthly production volumes, then calculate the payroll and the overheads, divide them over the production for each month, the volume of production, and use this rate to calculate the production cost in cost of goods sold, so in the goods that were actually sold. So let's say if we produced 100 computers this month and sold 110 computers this month, what I do is I take the salary expense, divide it over 100, the volume that we produced, and multiply it to the volume that was actually sold. It's one of the ways to forecast that, and the main assumption here is that most of the items sold during the year are items that were actually produced during the year. Okay, so working with this assumption, the first thing we're gonna need is our production quantities. Let's just format this section, and here are just the months. Actually, I'm not going to use that for any formula, but just for the sake of consistency, I'm going to do it like that. Okay, so we've asked our production manager, and that's an estimate. So I'm pretty much going to be producing 19,000 per month with a little drop in August and September. And we know that this is due to our annual stock take that takes place between August and September. And we're going to be producing 215,000 items. Okay, let's just move that over. Oops, here. And production volumes. And that's it. Actually, it's just one line, so I'm just going to bring it up here. And this is the volume that you're going to be producing each month. Again, our next section is going to be our production payroll expense. Just copy the formatting and copy this here as well. So first thing we need here is our salaries, and we got our salaries here from our HR department, and those are the ones we need for production, and we're going to use the ones for administration later on. So just gonna copy those, and notice that those are gross salaries, and for sick leaves in our administration, it's our total cost, because in administration and selling we have some people that are getting more than the maximum amount that gets taxed by the government. That's why we wanted our HR department to calculate those with precision. And for those, we're just going to apply an average percentage for social securities. So let's just copy those over here. And just going to use this total. Again, we can see that those are gross and this is our total cost. So I'm just going to insert a few lines here. And gonna add for employer little heading here. Just gonna copy those. And from what we know, it's about 22%, the social securities that are paid by the employer. So we'll just multiply all of those by 0.22. Copy that to the right, copy it down, and add some totals. And the next thing we can do is calculate our total payroll expense. Keep in mind that this is just one way of approaching the payroll budgeting. What you can do is look at historical data and just apply some percentage for growth or just carry it over. There are numerous ways of actually forecasting and budgeting your payroll expense. Just the one that we use here is we're not looking into salaries per individuals and calculating those, just using the totals that we get from our HR department. And this is going to be pretty much the sum of all those. This is our total payroll expense in production. Okay, so this is the expense. Now let's go ahead and calculate our cost, which is the portion of this that's going to go into our cost of goods sold. So production payroll cost. This is going to be in our cost of goods sold on the income statement. Just get the formatting from here. And you can also get our month headers. In order to calculate those, you're going to need the sales quantities. Remember, we're going to divide over the production quantities and multiply by the sales quantities. And we're going to calculate our payroll expense per item, so per single item produced. And after that, you can just go ahead and calculate our production staff cost in cost of goods sold. We can link our sales quantities from our budget or from our sales budget, which would probably be more consistent with our approach. Copy those to the right. Add a total, 244,000. Remember this to be correct. And I'm actually gonna cover those. I don't always do that, but I like to sometimes color cells that refer to other sheets green, especially throughout my workings. It's gonna makes it much easier to follow things along. And you probably already noticed that most of my constants are colored in blue. So those are formulas, those are constants, and those are formulas that refer to other sheets. And keep in mind that this is only for working sheets. So in my budget sheet, I won't color those with different colors. Just wanted to look proper here. So back to our production. Okay, so now that we have the sales quantities, we can calculate our payroll expense per item. And this is going to be our total payroll expense, but not divided over our sales quantity. Remember, divided out over our production volume. Okay, copy that to the right. And now by multiplying our sales quantities over our payroll expense per item, we get the actual staff cost for production that's going to go into our income statement. Let's go ahead and link this one. remember that it's with a negative sign. Copy that to the right, and we're getting closer to our actual gross profit figure. Okay, so our next section gonna be our overheads. And here we're gonna have some department ID and the department name. This is gonna be clear in just a second. So we already saw that we have a separate expenses budget that all our departments provided to us. Let's look at it. We know that the two departments that go into production are the production department itself and also our materials warehouse. So those two go into our cost of goods sold, into our production. And we need to transfer those. So I'm just gonna copy the two department IDs and PR, and this is gonna be materials warehouse, and this is gonna be production. Okay. In order to transfer those there, I'm gonna use some mapping, and the first thing I want to do is here in my expenses file. What I'm gonna do is I'm gonna add two more columns, and those columns are gonna be head account and destination account. Add them, remove those, and make sure visible. So my head account is gonna be just the left three numbers, so my main account. And we're gonna use that to make breakdowns later. And my destination account is where those are going. So just bring that to the bottom. Just want to have it. I'm not going to need it for now. And my destination account, I can set that for the two production departments that I have. So for my material warehouse, I'm going to set it to 611 because this is my account where my production is accumulated, where my production costs are accumulated before being transferred to my goods, my finished goods. Okay, so I'm gonna copy that to all the material warehouse. And I'm also gonna do that for all my production expenses as well. The rest of those expenses in the list here are going to be separated between administrative expenses and selling expenses, but we're going to do that on a later on stage when we get to those sections. So now that I have those set, I can just go here and type in my SUMIFs formula. So what I want to calculate is I want to calculate the January expense. So I'm here, select January, and it's going to be fixed on its own, but we're going to remove those by pressing the F4. You now see that it's not fixed because I want it to move to the side when I copy the formula over. And my criteria range is going to be my department ID, which I don't want to move. Want it to be this. And I also want to lock this so it would only move on the row going down, and it won't move, it won't change the column when I move it to the right. And those are my overheads. So my non-direct production expenses. Total production overheads. And this is the sum of those two. And the next thing we need is to calculate overheads and COGS in our cost of goods sold. Just gonna copy this header. Call it overheads in production. And what we'll need here is first we need our sales quantities. And I know that I have them up here, but maybe at some point I could remove a section or something like that. So I'm just going to go and grab them separately and color them green, format as numbers, and copy that over to the right. Some of those. Okay, the next thing we need is overheads per item. And this is going to be my total overheads divided over, remember, my production volume. Calculate that for a month. And at the end, my overheads in cost of goods sold, the ones that go into the income statement, are going to be my sales quantities multiplied by my overheads per item. Copy that over. And now we can link that in our budget. Remember to use the minus. And that's it. We now have our gross profit calculated. And there's something really important that you must know is that all those values that we linked from other files are linked content. So anytime you open Excel, your Excel spreadsheet would want to look to those files and see if something changed. The problem is that Excel cannot look through the files if they're not open. So if, let's say, we give enable content and continue, right now everything is fine, but sometimes it would try to update the values and you're going to get this value when it cannot find it. And this can break your model if you save it like that. So the best thing you can do is whenever you work on your model, just open your expenses file, because we're not going to be breaking the links to this file to the very end. And just work with both files open all the time. Okay, let's now look at our administrative and selling expenses. And in order to calculate those, the first thing we need to do is look at our expenses budget and figure out which one would go into selling and which one would go into administrative. We already saw that our destination account for production was 611, and we're going to use 614 for admin and 615 for our selling expenses. Go to the top and start from there. Our accounting department, accounting is general admin function, so we're gonna put it in 614 as an account. Then our domestic sales would obviously be in our selling expenses. Cover those. Our export sales are gonna be there as well, and our finished goods warehouse is gonna be in our selling expenses as well, because it's only servicing sales. Remember that our material warehouse, which is servicing production, went into our production cost. Copy this down. Then general administration would obviously be 614. Our human resources would also go into our admin expenses. Our IT and TRP support would also go there. Our logistics would also be
admin, and we come to here. Okay, our material warehouse is already set out. Our operations department is going to go into our admin as well, so 614. Our procurement would also go here. And production is already set to 611. And what we're left with is our R&D department. And our R&D department, we're actually going to include in our selling expenses because they are directly related to figuring out what to sell. Okay, now that we have our destination account set for all our expenses, we can start building our selling and general admin expenses working in the budget. Okay, now that we have the destination for all our expenses, let's go ahead and add our administrative and selling expenses worksheet. So we're gonna apply formatting, administrative and selling expenses. Go that is G&A, budget, and our company. Okay, we're gonna add the months. Actually gonna zoom that a bit first. It's easier to see. Months and our total. Go ahead and format those. And freeze the panes here. Our first section is going to be our administrative expenses. Just color that in our bright orange. And I'm going to bold those as well. And here we're going to have, we know that our administrative expenses are account number 614. And we're going to have a few different categories that we want to separate them in. So the first thing we're going to have is our personnel cost. The next thing we're going to have are the following accounts: 601, 602, 606, and 609. And those are the accounts that we actually budgeted in the expenses budget by departments. Those are materials, hired services, and those two we're going to present as other. Okay, now that we have our overview of how we're going to present those, let's type in some formulas. So first, we're going to start with the materials, some ifs. Going to go to our expenses, January. We want to remove the fixture of those so that they're going to move to the right as we move the formula. And what we want is we want our destination account. You're going to fix that to be this one here. And we're also going to fix that. And we want our head account, to be this one here. And this one, we're only going to fix the column because we want the row to change as we go down. Okay, move that to the right and move it down. Add some totals. And then we need our total administrative expenses line. Gonna be a sum of all those plus the personnel cost. And we already have our personnel cost.
we already have our payroll in administration here, so let's just copy those two. It's gonna place them down here, and for our admin department, this is what we need. I'm gonna leave it blue. Just grab that total. And that's it, our total administrative expenses. Let's just link those to our budget. Remember to do that with a negative sign. And that's it. And the reason why we're not calculating any social securities here is that, as we discussed, this is the total cost because it's not the same percentage for each of our employees. Therefore, we asked the HR department to give us the total cost. Okay, let's go ahead and do our selling expenses section. Selling expenses. Start with this. And the first one is going to be our personnel cost again. And we already have that here. Now remove those two lines. And actually the rest is going to be pretty much the same. So what we can do is actually copy those. Paste it here, make this 615, and rename this to total selling expenses. Have the same totals here and totals here. Okay. What we can do here is we can use the formula that we already created and just make sure that we drag this one to 615, and it should automatically just look at expenses that have the same head account, and the destination account is 615. So we can copy this to the right, copy it down. We need to remember that here we also have to add our commissions. Remember our sales breakdown, the commissions percentage that we were talking about earlier on when we were working on our sales plan. So the commissions are going to be a part of our selling expenses. Just add it here. Commissions and hired services, that's where we're going to include them. And just going to use some ifs. Actually, first, I'm going to need to make this a number because we're going to use those as reference points for the formula that we're going to type in. And just for the sake of being consistent, I'm going to transfer that over here as well. And let's start typing our formula. Some ifs, we want the commissions, and we want to freeze that. We always want to use this column. And we want to get those where the month, freeze this one as well, is our month, and we want the month to move when you move to the side, and we don't want it to move when you move down. But since we're not going to be copying this formula down, I can just leave it like that. And those are our commissions, 6,543,000. Let's see, 6,543,000. Okay, we have to include those in our hired services. Just gonna add them here with the plus. And that way we get our total selling expenses. Let's just go ahead and link those here as well.
Okay, we now have our admin expenses and our selling expenses in our income statement budget. Before looking at our other operating expenses, let me just format those as red, because just the way I like to format things that reference to external files. That way, before we send the model, we know to break those links. The only exception being our budget, where it's just, the idea is just to have the positives black and the negatives red, so we can easily spot inconsistencies between different months. And next thing we're going to do is our other operating income and expense, and we're going to start with some expenses, and those are our spare parts that we send to our customers for free. So let's create a new sheet, zoom it to 160%, and apply our formatting. And we're going to call this spare parts provided under warranty terms. SPR, PRTS budget, and our company is Acme Limited. Okay, here it's going to be a really simple calculation, so we can just do directly the numerical months. And the total. Let's just format those with a dark blue background and a white color for our font. And don't forget to align to the center. Okay, so what we have here is we're going to need the gross sales first. So let's reference those. And remember, those are gross sales. So the sales without any discounts and bonuses. Link them from here. And don't forget, we're going to cover this green because it's referencing to another sheet. Add a sum. And the way we're going to calculate our spare parts is based on a percentage of sales. So for our purposes, our production managers have calculated that about 1.6% of our sales we have to send as spare parts. So the value is pretty much 1.6% of gross sales. Let's calculate this, fix it with F4, multiply it by the gross sales for the month. Carry that to the right, total, and just to make sure that it's evident that this was the thing that we wanted to calculate, let's just bold the whole thing. And that's pretty much it. Let's just link it. And remember that this is an expense because we are sending those parts for free. Carry that to the right. And yeah, we might be adding some future amounts, some future calculations to other operating income and expenses if we come across such effects. But so far, we already have our EBITDA, and it's 56 million for 2021. Which is about 8.8%. And I gotta say, depending on the industry, I think it's pretty much fine. Okay, so the next thing we wanna tackle is our depreciation and amortization. And in order to do that, we have to prepare our property, plant, and equipment schedule and our intangibles schedule. Let's start with our property, plant, and equipment, our PPE. Zoom this a bit and apply our formatting. The name of the sheet is going to be Property, Plant, and Equipment Schedule, PPE Budget, and our company. Okay, so this one's going to be short as well, so we can just use the numerical months. This one is going to be this +1. Be the formatting. Be to the right and total. Format that with our dark blue and our white for the font. Okay, so what we need for PPE is our opening balance, our additions, which is going to be our capital expenditures, our depreciation, which is the expense in the income statement, and then we get our closing balance, which we'll use in our balance sheet. Okay. And this is going to be our total line, so let's format it accordingly. Bold it. It's going to be the sum of those above. And we'll also have a total for our CapEx and for our depreciation. The opening balance is going to be our closing balance from our financials. So we are ending 2020 with 91,667 as a balance. Just copy that and gonna paste it as values and gonna color it blue. And then our next opening balance, the next period, is going to be the closing balance for the previous period. Copy that to the right. All we have to do now is add our additions and our depreciation. This is the capital expenditures budget that we have. So those are the additions we have for property, plant, and equipment. Just going to copy those and paste them here. So those are all the capital expenditures that the company management expects to make in each month. In order to include them above, we need to calculate the total CapEx. The top and the bottom line. And here the total is going to be the sum of all the expenditures. Carry that to the right. And now we can just add our CapEx up there with a plus. Okay, next thing we need to do is figure out how we're gonna estimate our depreciation. If we look at our financials for the previous years, we can see we have our depreciation and amortization here as a total, and we also have our PPE balances. Let's just go ahead and calculate here on the side the percentage of depreciation. So first year over the opening balance. We don't have the opening balance, so I'm going to skip this one and I'm going to start from year 2. So it's going to be the second year depreciation and amortization over our property, plant, and equipment closing balance from the previous period. And this is about 10%. Calculate that for each of the next years, and we can see that it rises and gets to about 16%. What we know from our discussion with the management is that the average percentage that they expect to get on property, plant, and equipment depreciation is about 14% of the opening balance for the year. And if we start with 14% for the year, we can pretty much guess that our assumption can be about 1.2% on a monthly basis. Just going to add some room up here, and I'm going to type in assumption for depreciation percentage. Bold that. And I'm going to type in my assumption, 1.2% on a monthly basis. What this means is that
our depreciation with a negative sign, of course, is going to be this fixed multiplied by the opening balance. Copy that to the right. And we get our depreciation expense of 12,899,000 euro. Now that we have the depreciation, we can link it in our budget. Here, depreciation, we know that it's already calculated with a minus. So just link to this here. And copy that to the right. Okay, now let's go ahead and prepare our intangibles schedule. And since it's so close to the PP&E schedule, I'm just gonna create a copy of this one and rename it to Intangibles Budget. And here as well. Intangibles Schedule. Assumption for amortization. And after our discussion, we expect that amortization on intangibles would be above 50% because it got to 50 last year. And we've been acquiring a lot of licenses that have less than 2 years lifespan. So our expectation is about 5% on a monthly basis. Need to get our opening balance from our financials. So the intangibles closing balance for 2020. Paste that here. And we also need to update our CapEx. So our budget for tangible assets is 150,000 per month, just general investment. So what we can do is just delete those, make it 150,000 general. Copy that to the right. And with our percentage updated above, we get the proper closing balance for our balance sheet. And of course, this is amortization. Let's go ahead and link it with our depreciation on the income statement. Plus this. And since this is linked now to both, we can just carry it over the top, and our total depreciation and amortization expenses arrived at 15,115,841 euro. And this gives us our EBIT, earnings before interest and tax, at 41 million or 6.5%, still doing pretty good. Okay, so the next thing we got to look at is our interest expense, and in order to do that, we need to prepare our debt schedule, and this is going to be our investment loan plus our working capital loan. Let's start with our investment loans, and we have the repayment. We have the repayment schedule here, so I'm just going to copy the whole thing, bring it over here. Zoom the sheet a bit. Okay, and gonna apply my formatting. Gonna be debt repayment schedule. Repayment schedule. Debt budget. And our company Acme Limited. Just make that wide. Okay, so the loan was signed in 2013, and I can already see that there's some error here, and the years have moved over. Well, let's just use the year function to get the year out of the date. Okay, perfect. What we can do next is can actually make a summary using a pivot table. Insert pivot table, but just gonna insert it in this existing sheet, and I'm gonna do so right over here. Okay, and what I want to have here is I want the principal repayment and the interest per month for 2021. So I'll have as a column, my principal repayment and my interest. Actually, those have to be in the values. Okay, and then my columns are gonna be the year and the month. I'm gonna move the values on the rows so it separates them on different rows. The next thing I want to do is I want to filter only 2021, because that's pretty much the year I care about. And that's it. I have my principal repayment and my interest for 2021. Format that a bit. And now we can do, actually, I'm just gonna come here and copy those. And I'm gonna move it one over. Okay, so the lines I need is the principal repayment, which I'm gonna just directly grab from up there. The interest expense, the income statement. Then I'm gonna calculate my principal balance, which I'm gonna need for my balance sheet later on. And I'm also gonna separate it into short-term and long-term portions. Okay, let's start with our principal repayment. It's gonna be negative, and I don't want to use this get pivot data here, so I'm just gonna type it out. Minus L12. Okay, L12. Carry that over. Perfect. And the interest expense, the same, minus L13, which is my interest, and carry that over. Calculate the total. And I noticed that have some inconsistencies in my font, and this is due to the pivot table. So yeah, that's much better. Just bold this total. And the principal balance. How are we going to calculate our principal balance? Well, what we can do is we already have the closing balance here. So at the end of month 1, my principal closing balance will be the end of January 2021. So after this repayment, this is my closing balance. Okay. And we can just go ahead and do the same thing with following the months below, or we can just calculate that by this plus the next repayment. Doing it that way would also allow us to create a little check at the end. So 1,410,000. Let's go and see if this will be the case at the end of 2021. End of 2021, here it is, which means that we are properly calculating everything up here. The short-term portion is going to be the next 12 months, so the next year after the end of the current month. So for the so at the end of January, the balance for the short-term portion should be the next 12 months after January, which means starting from February. Okay, go to 2021 and select the principal repayments from February all the way to next January, 12 months. Okay, 2,418,000. The same thing for the end of February. It's going to be the repayments from March to next February. So go to 2021 and it's going to be this up to here. Should be the same for now, as our principal repayment each month is the same. This one is going to start from April, as at the end of March, and go to March. Okay. This one is going to start from May, go to next April. Yep. And the one for me is going to start from June. And go all the way to May. And you see why I'm taking the time to do that by hand. So this is going to start from July. Is that you see that we're soon about to repay everything. So at some point, the short term would become less. So it's not going to be consistent the whole year. And this one, July, starting from August, is the last one that's going to be at this amount. And from now on, the rest. So the one at the end of August, the short term is going to start from September. But you can see that there's no more long term. Here it's the same and here is the same. So we can either calculate it that way or we can just assume that it's going to be the same and do it like that. And then the long term is going to be the principal balance minus the short term. Just carry that over. And that's it. And from here, we no longer have a long-term portion as everything is in short term. Okay, this video was a bit long, but it was important to calculate those and to understand why we're doing it. And just go ahead and link our interest expense on the income statement. And carry it to the right. Okay, now let's look at our working capital loan. I'm gonna create a new sheet, apply some formatting to it, and this is gonna be our working capital loan schedule. On budget and our company name. Okay, let's copy over our header from here. And I'm actually gonna move it one to the side to be consistent with other sheets. And let's also zoom into 160%. So what we need for our loan is our opening balance, our repayments, utilizations, and our closing balance. We also need our interest expense for the income statement. Let's format those a bit. Actually, this one is going to be a top and thick bottom, and this one is going to be like that. With the sum of those. And our opening balance from the second month will be the closing balance on the first. And we need our interest expense as well. Our interest expense is 1.75% on an annual basis. So the way we're gonna calculate our interest for each period is gonna be this percentage multiplied by the opening balance. Copy that over, add a total here, and now we need to figure out our opening balance. We don't have that, but what we have is we know the total balance of our debt at the end of 2020 was 78,828,000. Let's get that. This plus this. Okay. Just paste it at values. But this is our total. What we need to do is we need to reduce it with our debt balance at the end of 2020. And our debt balance at the end of 2020, go down here, is 3,828,500. So what we can do is equals to this number minus the balance at the end of 2020, and we get 75 million. Just gonna copy this as a value. Are we looking to make new utilizations? A discussion with the board of directors tells us that they plan to utilize 5 million in January. Oops, 5 million. And just make sure to color all those in blue. And also need some here. And 7.5 million in February. Those are the amounts that we need in order to carry out our working capital needs. Then we're going to start repaying, and the repayments are going to be done in $5 million installments in May, August, September, and November. We're going to do those with a minus because we're decreasing our balance. So we said May, August, September, and November. This is what we've agreed with our bank. Just gonna include zeros in all the other cells. It's not needed for the model to work, but it kind of makes it more obvious that we actually went through all those cells and there's nothing to be included there. Okay, so we're starting with 75 million and ending at 67.5 million. And there's something wrong with our interest, and the reason for that is that we did not fix this value here. So now when we drag it over, that's what we get. And this doesn't seem right as well, because remember that this is on an annual basis and this is on a monthly basis. So what we need to do is divide it by 12. Copy that over, and now it makes much more sense. Okay, let's add this to our income statement as it's evident here. It goes to the income statement. So here on our interest expense line, we'll just add our working capital interest. Copy that to the side, and we are done with our interest expense. We don't have any finance income, and we don't expect any significant other finance costs. We have no utilization fees whatsoever, so we're just gonna leave those as zeros for now. This actually should be the total, and maybe we can revisit them later. Okay, next thing we're gonna do is look at our non-operating expenses and income, and right from the start I can tell you that we don't expect any non-operating income, so I'm just gonna paste zeros everywhere. And for non-operating expenses, let's look at our financials for the prior year, and we can see that, just calculate the percentage of the net sales. you can see that they've kind of been growing, but remaining around 0.2% of net sales. And I think that it's safe to assume that the growth is no longer such as it was between 2017 and 18 and 18 and 19. So I think we can assume that it's going to be around 1.2 million again. So budgeting 100,000 per month is, I would say, fair. We're just going to type here 100,000 and did you notice something? You notice that nothing changes down below here. So this is our total finance. And this line should be included here, but it's not. We forgot it. So just gonna add this here. And this one as well. Even though it's 0, we might update it at some point. And now we need to copy this formula to the right, and we also need to copy this 100,000 to the right. And yep, the only thing left is our income tax expense. And in our jurisdiction, this is a 10% flat for the industry and the size of the company. And that's pretty much it. We have our profit for the period. We can see that we're going to end the year at 35 million profit. Okay, great job so far, guys. Now let's go ahead and start working on our balance sheet. We completed our income statement and our budget is starting to look really, really great. Next thing we're going to do is we're going to start implementing all the logic for our balance sheet. And we can adopt the same approach as for the income statement. Just look at our prior year financials and copy everything from here, all the structure. And I'm also going to grab the first period so that we can have the formatting. And then I'm just going to delete the numbers. Okay, section 2, balance sheet. And let me just copy over this. And I'm actually going to grab the orange on the top as well. Okay, and the balance sheet won't have a total because the balance at our 12th month is going to be the balance at the end of the year. And don't forget to remove those and make sure that all the total lines remain and that they're actually formulas. And the check as well. Again, let's just copy actually all those from here. I want to copy the empty cells as well. That way I'm going to include the formatting. I'll copy it to December. And yeah, before we start filling this out, if you remember, we did this table of contents thing and then completely forgot about it. So now that we have more tabs here, let's go ahead and update it. If we just go to it and hit table of contents, it would automatically select this table of contents. All we need to do is I'm just going to hit select all, update table of contents, and now everything is listed here with the relevant working name, and we can use this to move around our model. Okay, let's start linking our balance sheet budget. So we already have our property, plant, and equipment. Remember, we prepared our schedule when we were calculating our depreciation expense. So now we can just link the closing balance here. I'm gonna delete this one. Okay, at the end of January. Just carry that over to the end. We also have our intangible assets that we calculated here, closing balance. Right, and I also saw here that I've dropped the total. I don't need this total. It's not a proper total. Okay, next one is deferred tax asset. And what I usually do is just leave it the same, especially if it's not like a company that has a lot of deferred taxes. So just grabbing the balance from last year from our financials and just gonna paste it here, carry it over to the right. And I'm actually gonna color it blue just to be sure that I always remember this is something that's manually input. Okay, we're gonna start figuring out how to calculate our working capital balances, including raw materials, finished goods, trade receivables, and trade payables. So the first thing we're gonna do is look at the cash conversion cycle, and for this, in order to figure out our days inventory outstanding, days sales outstanding, and days payables outstanding, we're gonna look at our historical data. So I'm here at our financials from the past years, and just gonna extend those a bit, create a new section. And gonna call it working capital cash conversion cycle. And I'm gonna have 4 sections here. So the first thing I want to calculate is days inventory outstanding, or my DIO outstanding. For raw materials, I'm gonna have my opening balance, my closing balance, my cost of goods sold, and my days inventory outstanding. Okay, let's format that a bit. Bottom and bolded. Here, we don't have the opening balance for the first year, so we're gonna start from the second, and our opening balance is gonna be the closing balance for prior year, and we're gonna take raw materials. Copy that to the side. Our closing balance is going to be the current year balance of raw materials. Copy that to the side. And our cost of goods sold, we're going to turn it to positive because it's negative right now. And here it is, cost of sales, like that. Okay, and now let's calculate days of inventory outstanding. So we need the average balance, open brackets, this plus the closing balance divided over 2. And we're going to divide that over our cost of goods sold and multiply it by 365 days to find the days of inventory outstanding. Okay, carry that over. Perfect. And at an average. Okay, 141. Let's go ahead and copy this whole thing. So we got to do the same thing for finished goods, for trade receivables, and for trade payables. Okay, this is going to be my finished goods. And we just link the opening balance of my finished goods is my prior period closing balance. Copy that. The closing balance. Link it up here. Carry that to the right. And my cost of goods sold, I'm just going to link them from here. Okay, about 58 on average. It rose a bit. And now we have days receivables outstanding. This is our DSO, days sales outstanding, actually. Just fix it. And here it's important to remember that we have sales. So our trade receivables, we're going to be taking together our trade receivables plus the opening balance, and we're going to add our intercompany receivables as well. Okay, calculate those to the side, and our closing balance is gonna be our receivables balance for this year plus our intercompany receivables. Okay. And here we need to link our sales. Again, about 47 days. Go ahead, and the last one is going to be our days payable outstanding, DPO, and it's calculated with the cost of goods sold. So here we only need our opening balance of trade payables, and here we need our closing balance of trade payables. Carry those to the right, and I'm going to link the cost of goods sold from over here. And we have about 104 days on average. So the idea is that we're going to use those in order to calculate our working capital balances. Okay, next thing we're going to do is we're going to add our working capital schedule. Okay, let's apply some formatting. We're going to call this working capital forecast and capital budget and our company. Let me just zoom that so it's a bit easier to see. And what we're going to do is just going to go ahead and copy this top from my budget. And I'm going to freeze it here because this one is going to be a bit longer. So just going to freeze those at the top. Okay, the first thing we need is going to call this section 0. It's going to be my annualized sales and cost of goods sold. And you're going to see what I mean by annualized. That's orange and bold it. I'm gonna go ahead and grab this header with the numbers as well, just to keep everything consistent. Okay, and what I'm gonna do now is I want to calculate the last 12 months of revenue and cost of goods sold for each month. So if it's May, I want it to be from June 2020 to May 2021. This will allow me to properly reverse the cash conversion cycle calculations that we did on the prior years and apply the days that we arrived at to calculate my balances for each month of 2021. Okay, let's go ahead. First, I'm going to need the sales per month for 2020. And then I'm going to need the sales net for this year. And here, going to have sales 12 months. Going to do the same thing with COGS. I have COGS per month 2020. COGS and COGS 12 months. We have the monthly sales for 2020. I'll bring them over and make them blue. Add some totals. Oh, no. Make it a bit smaller. Okay. And my total. Actually, let me just copy the total over here and over here and over here. Let me bring in my COGS per month, which I also have here. Gonna do those. Make those blue as well. And now I'm going to link my sales, and I want those to be green because they're going to be linking from another sheet. Going to go to my sales budget and going to get my net sales. Read those over, and my sales for 12 months will be this one plus a sum of those. Okay, so I'm getting 12 months, my current month and the past 11 months. But doing the formula in this way would actually require me to make it manual. So what we can do is I'm going to make it a bit more clever. I'm going to sum D13 and I'm going to fix it to D, which I'm not going to fix because I want it to move with the columns. Not that I need to fix it. I actually don't need to fix it. Just going to do it like that. And this is going to be plus a sum of this to this here. And I need to fix this last one. Just writing dollar signs. Okay, let's see if this works. Yeah, it seems it works. Okay, and yeah, only for the last one, it's not gonna work. So we're just gonna remove second part here. Okay, great. Now we need to link our COGS as well. And I'm going to do that to the budget here, where I have all the components and my total cost of sales. And I'm going to make that green as well. Copy it to the right, and I'm actually just going to copy those over. And hopefully, oh, okay. I should have not linked the 13 and also the 12 here. And for 12th month here as well. So now I can copy that here and I get the COGS for 12 months as of each month. Let's check it here. Yep. It's the past 7 months from 2020 and 5 months from 2021. Okay, now that we have this, we can start calculating our working capital balances. Okay, so let's start with our first working capital item. And this is gonna be parts and materials. What we're gonna have is gonna set up the table like that, so that if we at some point decide that we're gonna calculate on a 360 basis or something like that, we can always switch. And below that, gonna bring our periods. And we'll have our inventory days. For materials, we're gonna have our cost of goods sold, our average balance, our opening balance, and using those, we're gonna be calculating our closing balance. Just make sure that this is like that. We don't need a total here. And let's see, for raw materials and parts, we calculated an average at 141. And it's been a bit better in the prior year, but we
We actually expect it to go slower next year because we're expanding and growing quite a lot and changing the complexity of our warehouse management and stuff like that. So I'm just going to set that at 155 days just to be on the safe side. So I'm just going to type it in, format it, make it blue, and carry it over. Our COGS, we can take the COGS that we calculated here with a negative sign. Also copy that to the right. And this will let us calculate our average balance. And our average balance will be our COGS divided over the days in the period multiplied by the inventory days. And here we need our opening balance. Okay, we're going to get our opening balance for 2021 from our closing balance here. Paste it as values. Make it blue. And our closing balance is going to be our average balance multiplied by 2 minus our opening balance. Okay, let's both those. Now we can carry this formula over. We can also carry the formula to calculate the average balance. And our opening balance is going to be our closing balance from the past month. Okay, we now have our closing balance for raw materials and parts. Let's link it in our budget. And go to the right. Okay, next let's just copy this whole thing and use it to calculate our finished goods. Two is gonna be finished goods. Let's take a look at finished goods. So we have 55, 53, 63, 60, an average of 58, but I think that 2019 was more to the point than the other years, and we're expecting something like that, maybe even a bit slower, just like the raw materials. So I'm going to go with 65 here and use that for our calculation. A bit more conservative, but that's okay. Just gonna do it 65, and then COGS should be linked here. Copy it over. The average balance, the formula just works. And our opening balance is going to be our closing balance from the prior year. So let's get it from here. Okay, and now we have the closing balances of our finished goods for each month. Because it's just the same formulas, we just pretty much change the days and the opening balance, and that's all we need because we created a nice formula. So let's link this one as well. And copy it over. Okay, let's go ahead and look at our trade receivables right now. But before we start with our section here, okay, for our days sales outstanding, we see that it goes a bit around 46, 47, something like that. I'm going to stick with 48. I think last year was most representative. And there's some decline, but I don't think it's going to be that much. So we'll just go ahead and stick with 48. And it's really important to remember here that we included our related parties in the calculation of our balances. This is because our intercompany receivables are like the same receivables from selling of goods, like our trade receivables. We just present them on a separate line here. And it's important to remember that after that, when we calculate our total trade receivables in our working capital budget, we then have to deduct the intercompany receivables that we're going to be presenting on a separate line. Okay, let's go ahead and copy this whole section from finished goods and number 3, trade receivables. Okay, this is going to be sales days, and we decided that it's going to be 48. Copy that to the side. Remember that this is now sales and not COGS, and link that to the 12-month sales up here. Copy that to the side. And the only thing we need to change is our opening balance. Closing balance for last year, 84 million. Let's get that and update it here. Okay, and now we have our receivables closing balance. Let's link it up here. Trade receivables equals this. But since we calculated this whole amount, including the intercompany receivables, and we're going to present them separately, what we need to do here is just deduct them. And copy that to the right. And that's trade receivables. Okay, we're almost done with our working capital balances. The only thing left to do is trade payables. So let's go here and copy this whole section. Paste it here. Trade payables. Payables days. For our days payable outstanding, we can see that we have about 104. But since we increased quite a bit the inventory ones, I'm going to increase those with about 10 days, something like that. So just going to leave it at 114 days. Copy that to the side. And remember that you're looking at COGS here. Link the 12-month COGS from here. And don't forget to add the minus so it's not a negative. And then we need to change our opening balance. So the opening balance is going to be the closing balance from here. And here we have our trade payables balances. Let's link them in the budget. Okay, perfect. As you can see with the check line, we are still a long way from having a reconciling balance sheet, but we also still have a lot of lines to fill in. Okay, let's go ahead and move over to intercompany receivables, other receivables, etc. Okay, next thing, we're going to prepare our intercompany receivables schedule. So, add a new sheet. Zoom it in a bit. And apply our formatting. Intercompany receivables schedule. Intercompany receivables budget. Acme Limited. Okay, this is going to be a short schedule, so I'm just going to copy this from here directly. And what we're going to have here is our opening balance, our sales to intercompany, or to sales to related parties, our collection of the funds, and our closing balance. And this, let's format it a bit. Okay, and we're also going to have our current month collection, which is pretty much how much we're collecting from the sales in the current month, how much are we collecting in the current month. And we're going to calculate this as 30 days on average divided over the sales days. So about 62.5% we're going to be collected in the same month, and the other is going to be collected in the following month. It's just a simple estimation. So basically what we're saying is that we have 48 days in which we collect money. So 62% of these 48 days are the first 30 days. Our opening balance will always be the closing balance from the previous period. Copy that to the side. And here I'm going to need my closing balance of intercompany receivables was 1,800,000. Copy this as values. Formatted and color it in blue. And this is my closing balance. Okay, so my sales to related parties are going to be calculated from my sales breakdown using this thing here. Remember, intercompany with a question mark has marks with an X. Okay. So, Pixaboo, those marked with an X, those are our intercompany sales. And in order to only get those, that's how we're going to calculate it, using this X. So our sales are going to be sum ifs. Going to go to the sales breakdown, and we want our sales. And we're going to fix those where intercompany those as well is X. And where our month, fix this one as well, is the month on top. Okay, and let's color those in green as they're linked to another sheet. So what we get is 7,744,000. Let's filter them here and see if that's correct. 7,744,000, and we can just go ahead and use the gross sales. We don't need net sales, as our early payment percentage is 0, and we know that it's always going to be 0 for our related parties. Okay, let's remove this filtering here. And the next thing is our collection, and our collection will actually be equal to minus, because it's going to reduce our balance, this proportion of the sales in the current month, and we also assume that everything that was from before will also be collected. Okay, let's copy this to the side, and that's our schedule for intercompany receivables. Let's link it to the budget. And you can see that it changes my trade receivables because we deduct them up there. Copy that to the side. Okay, next let's prepare our other receivable schedule. So add a new sheet, zoom it up, and apply our formatting. the receivables budget, and our company, Acme Limited. Okay, let's just go ahead and copy over our periods. And we're actually going to approach it a bit different this time. So we'll have our opening balance for all our items. We have legal claim receivables, tax receivables. This is our prepaid income tax, VAT, the value-added tax, and other deposits and prepaid expenses. Then we'll have movements, which is going to be the change, and we just format those a bit, indent them a bit, copy them over here, and then we'll also have our closing balance. And here we'll have our total closing balance for our balance sheet budget. Hold it. Okay, let's format all those as numbers. And we actually need the previous period. So just gonna use this here and call it period 0, because our opening balances are going to be the closing balances from our previous period. Okay, so let's link those up. Down and to the right as well. And our closing balances are going to be our opening balances plus the effect from our movements. Down and to the right. And our total closing balance is going to be the sum of those. Okay, so we need to input our closing balances for the different types of other receivables. We don't have that in our prior year financials, but if we just request it from the accounting or just look through some more detailed data, we can find the numbers. I'm just gonna type them here. Just format that a bit better. Okay, our tax receivables, 932,850. Our VAT, 837,000, and our other 850. Okay, perfect. 8238141. And that was the closing balance for last year on other receivables. Now we need to figure out our movements. So we don't expect any movement in our claims because we're just chewing on those and waiting for some resolution. So if something happens, it's going to be extraordinary. So I'm not even going to try to predict anything. Our tax receivable, so let's say that nothing will happen in January and February, and in March, they're gonna return everything that we've overpaid. So those are gonna be at 0. And then for 2021, we're gonna be paying in a prepaying of 400,000 per month. And we're going to continue doing that for the whole year. Our VAT, we're going to calculate from our sales. So our expectation is that we pay 90% VAT tax, and we have VAT on around 25% of our sales. And this is going to be our gross sales, not net sales, because discounts, it's after that. So we charge VAT on the total amount. Okay, so let's go ahead and calculate our VAT. So the first thing is gonna start with clearing our opening balance. So we're getting the repayment of the VAT receivable, and then we are charging 19% on about 25% of our sales, and going to our sales budget and linking our gross sales. Okay. Move that over and color it in green as it comes from another sheet. So you see that at some months we'll have to pay in VAT, and at some months we'll get some VAT reimbursements. Other deposits and prepaid expenses, I don't expect any changes, so I'm actually just gonna copy over those blue zeros. And that's it. We're done with our other receivable schedule. Let's just link it into our balance sheet. Okay, so before we look into our equity, let's look at liabilities and see what we can link up here. We already done trade payables, and we know that we have our bank debt calculated. So we have our investment loan, short-term and long-term, and we have our working capital loan balance as well, which is always considered short-term. So let's link those. Our non-current liabilities are going to be our debt that's considered long-term. Link this one here. And at some point it becomes 0. And our current liabilities on our loans will be our short-term debt plus our working capital loan balance. Okay, the last thing from our liabilities is our other liabilities and current liabilities. So let's go ahead and add a new sheet. Zoom it up a bit so that it's easier to see, and apply our formatting. This is going to be our other payables schedule. Other payables budget, and our company Acme Limited. First, I'm gonna copy my header with our periods, and we're gonna set it up the same way as other receivables. So first I'm gonna have opening balance, and here we have payroll, which are the salaries that we owe to our employees, and our warranties. I'm gonna indent those a bit, both this one, and just copy them here and here. Oops. Okay, this is our closing balance, and these are gonna be our movement. And I'm actually gonna separate the payroll to payroll new plus social securities, and this is gonna be my payroll payment. And at the end, I'm gonna have my total closing balance. Okay, let's format it. Okay, here again, we're gonna use the prior period closing balances. It's the same as with other receivables. You can just go ahead and check them with accounting, or if we have some further information, just gonna give it here, 3196,286.62. Okay, and my warranties are 1329870.06 for last year. Cover those blue, and then start linking our opening balances. And copy this to the right. And our closing balances are our opening balances plus our movement.
and this one will be this plus this movement here, and copy those to the side as well. And my total closing balance for my balance sheet is going to be the sum of the two balances. Okay, what we need to do now is figure out our movements throughout the year. So for warranties, this is a provision. So I assume that it will have 0 movement. And maybe some movement will be calculated when we recalculate the provision at year end, but I don't expect it to be significant. And my payroll repayment is going to be pretty much the repayment of my last month's balance. So just minus this one. And from next month, my payroll repayment is just going to be negative the prior period new payroll plus social securities. Copy that to the side, and the only thing left to do is calculate our new payroll each month, which is pretty much going to be the sum of all the payroll related expenses that we have. So we have such in general and admin and selling expenses. So this is going to be this from here plus my personnel cost from here. And then I'm going to go to the production budget, and it's going to be my production salaries, my warehouse salaries, my quality control salaries, my production salaries, social securities, the social securities for the warehouse employees, the social securities for the quality control, and my sick leaves as well. Move that to the side, and here we have our other payables schedule complete. Let's link it in the budget. And that's it. Let's look at our shareholders' equity section, and we're going to start with our retained earnings. To do that, I'm not going to create a separate sheet. I'm just going to copy a heading from here. And I'm going to add it below my balance sheet. Name it 3 and look at equity schedule. It's a good idea to separate that from all the other workings, to leave it here in the main model, because it's usually a 3-statement model, but you always have this like 4th statement, the statement of changes in equity. So it's good to know that your equity reconciles with your balance sheet and your income statement. So what we're going to have here is our retained earnings schedule. I'm going to start with an opening balance, our result for the period. I'm going to add a line for transfers to or from reserves and any dividends that we pay out. Then we're going to have our retained earnings closing balance. Okay, let me just format that. Gonna bold it. And we're going to format it like that. So actually need a 0 here. Our closing balance for the prior period, I'm going to get it from our financials, our income statement, our balance sheet, and here it is. Just going to copy it. Paste it here, format it as a number, and make it blue. Okay. And our opening balance for January is going to be our closing balance from the prior period. And this is going to hold true for all our months. Carry that to the right. And our closing balance is going to be the sum of those. So carry that to the right as well.
Okay, so we need to link a few things here. So our result for the period is going to be our net profit. And it's really important to remember that that's net profit before income tax. So our profit or loss before income tax. Carry that to the right. Okay, two more things to go. Transfers to or from reserves. If you look at our financials, you can see that our reserves changed. So we had some transfers here. We don't plan any transfers for this year, but it's a good thing to leave this line here because might change our model at some point, or we might use our model template another time. And if we don't have it in the template, we might forget about it. Okay, just copy zeros everywhere here. And I'm going to do the same thing for dividends. And after that, we're going to change the numbers for the months where we plan to make the actual payouts of the dividends that we voted. So I'm going to pay 10 million in February. Then we're going to pay 5 million in March and in April as well. We're going to do 10 million in June and another 4 million in September. Okay, now that we have our retained earnings closing balance, we just need to link it up in our balance sheet. Okay, so here it is, equals my closing balance of retained earnings. Let's carry that to the side. Okay, let's discuss something. You probably noticed that we calculated our retained earnings with our pre-tax profit, and that's not usually how we do it if, let's say, we're preparing a financial statement. The reason why we're doing it here is that if you remember, in our other receivables budget, we already budgeted our tax prepayment. So the way it works, at least in our current legislation, is that we pretty much figure out how much tax do we expect to pay for the current year, and at some point during the year start prepaying. We plan to prepay 3.6 million, and this is what was left from last year that they reimbursed us with. So this is the tax that goes through our cash flow statement and our balance sheet, and that's why we're not taking this tax here into consideration, because the reason why we even have this tax here, you can see that it's a flat 10% from the profit or loss. This is just for presentation purposes. We know that our income tax is calculated over our tax profit, not over our accounting profit, and we know that this is going to be different. We don't accrue tax on a monthly basis. We only do it at the end of the year after we prepare our tax declaration. And therefore, we're just putting this here for presentation purposes, just so that we have some idea at where our net profit is headed. Because this goes through our home model as our tax expense, our actual tax payout, not our tax expense. That's why to reconcile our balance sheet and income statement, we use a pre-tax income. And this is one of the ways to do it. The other way is to just have this be the actual tax payment and run this through our working capital in our cash flow statement below, and then calculate our retained earnings with our profit or loss for the period after tax, and not include it in our other receivables. This would also work and it would also reconcile, but I prefer to do it that way because this shows like the actual tax that I'm planning to prepay, because I've already submitted a declaration of how much I'm going to prepay, and this is more correct. Now let's create our share capital schedule and our reserve schedule. To do that, I'm actually going to copy this whole thing over here, and this is going to be my share capital schedule. I'm going to have my opening balance, my issued capital, and I guess that should be it. I'm going to delete those two. Make sure that this is proper. Okay, and I'm going to change my opening balance, and this is going to be my retained earnings. It's going to be my share capital. Just going to leave it at closing balance.
Okay. Need to change my opening balance in January. This is going to be my closing balance from last year. I'm going to go to my financials, and my share capital closing balance is 50 million. Okay, and I'm going to remove this link. We don't plan to issue any capital. So I'm just going to put 0, color it blue, and carry it over. And actually just copy this whole thing. Call this my reserves schedule, and gonna have opening balance and movements in reserves. And we don't plan any movements in reserves. The only thing we need to do here is change our opening balance, and we can get that from here, from our financials. Okay, and now let's link those both up here in our balance sheet. So our share capital is going to be our share capital closing balance, and our reserves going to be our reserves closing balance. We just copy those to the side. We're done with our equity schedule, so now let's bring over our cash flow, our final statement. Just gonna go to our financials, and I'm gonna copy the whole section just for the first period, because I want to get all the formatting here and all the formulas as well. Okay, and right back here, just gonna paste it. This is gonna be our section number 4, cash flow statement. Okay, so what I can do is just gonna copy this over here, and I'm gonna stretch this to the right. Actually, one more. Okay. And let's clean everything that's just numbers. So this thing. So those here without the total. Here as well. Our investing. And our financing cash flows. And we're also going to clean our cash and cash equivalents at the beginning. So this is the last thing that we need in order to fill every row of our balance sheet. Cash is the only thing we need, and the cash flow is going to let us combine the income statement and the balance sheet to get our cash. Just copy those with Control R. Okay, and let's start filling them. We start with our net profit or loss before tax. It's going to go up here. And I'm going to link it. Here it is, before income tax. Okay, and then we have to adjust it. So we have to bring back some effects that are non-cash effect. Let's start with depreciation and amortization. And because we're adjusting it, adding it back, we're going to use the negative sign. Go up here and find our depreciation and amortization. Write-off of uncollectible receivables. We don't have any of those. So I'm just going to type in 0 and color it in our blue for constants. Our provision for deferred tax assets is also going to be 0. Our interest expense, we need to adjust it back again with the minus sign. And we're going to go up here. And here it is, interest expense. And our interest income, I'm going to deduct it as well. It's 0 because we haven't granted any loans, but still it might change. Okay, this here is other finance income costs net, pretty much the same. And that way we have our operating profit or loss before working capital changes. Okay, let's bring those to the side. Going down in our changes in working capital. The thing we have to know here is that a decrease in inventory means that one asset is decreasing, another must be increasing. So a decrease in inventories means an increase in cash because we realized inventory, we got cash. The same with trade and other receivables. A decrease in trade and other receivables means collection, so we have more cash. And our trade and other payables, a decrease in trade and other payables means we paid them, so it's a decrease in cash. That's why for inventories and trade and other receivables, we're going to reverse the change. So we're going to start with minus. But the first thing we need to do is we have to
get our opening balances here. So for our raw materials, finished goods, trade receivables, we have those in our working capital budgets. I'm just going to link them there. Our raw materials, parts and materials, our opening balance is here. For our finished goods, our opening balance is right here. For our trade receivables, I'm going to link it to here. And it's important to remember that our trade receivables working capital calculation here actually includes our related parties. That's why we added this here, where we subtract the related party balances. So when we start calculating our changes, we need to get both of those. Our other receivables, and go to other receivables, and it's going to be the sum of those. So let's just delete that back and write sum and those four. And our cash and cash equivalents we can get from our financials. Okay, so our cash and cash equivalent, we ended at 5 million. Paste that as a value. And you notice that it's green. I'm just going to color it blue so that we know it's a constant. Okay, and we need to do the same thing for trade payables and other liabilities as well. So for trade payables, you're going to link to our working capital budget, our trade payables opening balance. And for our other liabilities, we're going to go to our other payables and go this plus this. Okay, now we can start calculating our changes in working capital. So for inventory, it's going to equal minus. Go up here and select raw materials plus finished goods minus prior period raw materials minus prior period finished goods. Okay. Then for our trade and other receivables, it's going to be the same, minus, open a bracket. And remember, we need to get both of those. So this plus this minus this. And I'm also going to add minus this, even though it's empty, so that the formula carries over here. Close the bracket. That's it. We also need to add our other receivables here. Let's do minus. And our other receivables, this minus this. Okay. And we're left with our trade and other payables, and this is going to be without the minus trade, our trade payables, plus our other liabilities, minus our trade payables prior period and other liabilities prior period. Okay. We can carry those over to the side. Perfect. We don't have any other charges. I'm just gonna make this a 0, painted blue, and carry it over to the side. And for our income tax paid, we're just gonna link with a minus because it's paid out to our tax receivables movement, so here. And I'm going to carry that over to the side. Okay. And we need to notice something here, is that here we're changing trade and other receivables, which includes the movement in tax receivables, and then we're adding the income tax paid here on a separate line. So what we need to do is adjust this here and deduct this movement that we're showing on a separate line. Carry that to the side. Okay. And we're done with our cash flows from operating activities. Going further with our investing cash flows, I'm going to start with our purchase of tangible, actually, and intangible assets. And it's going to be with a minus. Going to go to our PPE budget and get our total capex. and we're gonna minus again, go to our intangibles budget and our total capex and intangibles. And I see here that we forgot to change that, but that's okay. This happens once in a while. Okay, carry that to the right. Great. And we're not planning to do any disposal of assets, so I'm just gonna go with 0 and color it in our constants blue. Copy it over to the right. And we have our cash flows from investing activities. Now, going further, we have our financing activities. The first thing we're going to add is our repayment of borrowings or new borrowings. So it's a net movement in our borrowings. And it's going to equal, let's go to our debt budget, and we're going to link our principal repayment. And then we're going to add our working capital loan repayment. And we're also going to add our utilization because it's a net amount. Move that to the right. Okay, the next two repayment loans, granted new loans, we haven't granted any loans that will get repaid, and we also have no financial leases. So I'm just going to type in 0 for both, color it blue for constants, and copy it over to the right. Our dividends paid, we're going to link to our equity schedule. So up here, and here we have dividends. Carry that over to the side. Our received interest is going to be 0 because we haven't granted any loan. Just going to hard code it. Copy it to the right. And our interest paid currently is the same as our interest expense. But usually you'd link that to your debt budget and working capital loan budget. So I'm just going to do that here and go to my debt budget. I'm going to go at interest expense and add my working capital loan and my interest expense here as well. And copy that to the side. Okay, and that's our cash flow from financing activities. So we have our net change and cash flows. And all we need to do is link our cash at the beginning, which is going to be up here, our 5 million. And for our next period, it's going to be the closing one for the prior period. Carry that to the side. Awesome. And we have our cash and cash equivalents at the end of the period. All that's left to do is to link those up here in our balance sheet, and this is going to show us if we've worked correctly in our model. Link that. Copy it over to the right, and you see that our check balanced out at 0, which means that our financial statements reconcile and we've worked properly. Okay, now that we have our final model, there are a few things that we can add. And the first thing I'd like to start with is adding some validation checks. And I'm going to add those above everything. Just add a few lines here. Okay. Gonna copy this header. And name it validation checks. Okay, here are going to be my checks. And a few things I want to check for. Some of those are kind of basic, kind of obvious, but it really helps when the model starts to grow. And the first thing I want to check is that assets match equity plus liabilities. This is pretty much our balance sheet check. Gonna denote it here as balance sheet check. Gonna bold this one. Then I want to see if my retained earnings are reconciling. This is income statement and balance sheet check. Bold that one as well. Want to know if I have a positive cash balance, because even though everything is linked, the model doesn't know that cash cannot be negative. And this is also a balance sheet check. And something that's kind of hard to miss, especially when we're linking cash from the cash flow, but still, I want to see if my cash flow reconciles to balance sheet. And this is a cash flow statement balance sheet check. And I'm going to have one like a summary line down here to see if everything is okay. Well, let's start with the first one, our assets match equity plus liability. We already have a check for that. So I'm just going to see if it's 0. I'm going to see if this here, my difference between assets and equity plus liabilities, if this equals 0, then just give me 1, otherwise give me 0. So 1 is that the check passes and 0 is that it failed. Just copy that to the side. And this one is pretty obvious, but I want to add some conditional formatting, make it like really obvious for people that haven't made the report, the budget, for people that are just users of the budget. And I'm gonna add those icons. Just gonna go ahead and manage rules and edit the rule. Okay, so I want it to be green when the value is 1. Actually, I want it to be a number. When the value is 1, I want it to be green. And I want it to be red when it's 0. Okay, and I want to show the icon only. Let's apply that. Okay, and maybe center those. And now it looks pretty good. Let's say we don't have our, we've forgotten to include our PPE here. Delete it, and you see that this lights up in red. Okay, our next check, retained earnings reconciliation, we cannot actually do for the first period, so I'm just going to hard code one here. And for our second period, we're gonna basically what we want to do is see if we take the balance from the prior period, add the result, if we're going to get the same equity as in our statement. We're gonna see if, and I'm actually gonna round it because I'm not sure if I've rounded everything everywhere. So if round, and what we need to include here. Let's go down here and see if our retained earnings at February minus our retained earnings at January, our prior period retained earnings, is there something else that we need to deduct? Yes, our changes in our equity schedule. So we also need to deduct our transfer to or from reserves, or minus this thing here, and also our dividends, again with minus. And this whole thing rounded to 0. If it equals, and I'm going to round this one as well. And what we need here we need our profit or loss before income tax. So let's see if this whole movement equals our performance for the period rounded to 0. And if this is true, give me 1, otherwise give me 0. Okay, and I get a 1. Copy that to the right, and it's 1 everywhere. What we can do here is just copy the formatting here and paste it on our next line. And because we hard-coded this here, I'm just gonna color it in a light gray, just so I know that it's hard-coded, that it's different. And let's move forwards. To check for our positive cash balance, it's pretty simple. If our cash balance right here is bigger than 0, then give me 1, otherwise give me 0. Okay, we got 1 as well, all across the board. Let's copy from here our formatting. Here, perfect. And the last one is our cash flow to balance sheet reconciliation. And I'm gonna round those ones as well because I'm not actually sure. We've been doing so many calculations over our sheets that I'm not sure if I've properly rounded everything everywhere, and I don't want a difference of a few cents to like cause a validation error. So I'm gonna start with if, and I'm gonna round it. And what do we need to get here? We need here is our cash and cash equivalents from our balance sheet, rounded to 0 points after the to 0 digits after the decimal point. And if this equals, again, round and go get our cash and cash equivalents at the end from our cash flow statement, rounded to 0 digits after the decimal point. If those two are equal, give me 1, otherwise give me 0. And here's a 1 again. Copy that to the right and just bring down our formatting. And here, our validation checks, what we can basically do is just see if the sum of those 4, remember those are still numbers, is equal to 4, then give me 1, otherwise give me 0. Okay. And copy that to the right as well. I'm going to bring down this formatting, but I want to change this one a bit. So as those are selected, I'm just going to go to Manage Rules, look at the current selection only, and edit this rule. Just going to pick those icons, look a bit better. Okay, and here we go. Everything is perfect. And if we have a problem with, let's say, our PPE, we're going to see it light up here, but then we can go ahead and see further down exactly where our problem is. And in order to make that more visible, just going to add a validation header here, and just going to make it equal this one here. Copy that to the side, and also bring that formatting up here. Those are our validation checks. You can figure out a lot of ways to validate your budgets, your financial models as a whole, but it's a really important step, and you really need to incorporate it. And something that you need to not forget is to change your ordering after that. And 5. Okay, so we're gonna add some checks for our required bank covenant. So we have some ratios that we need to follow in order to comply with our bank covenants, and those are imposed from our financing institution in relation to our credit lines, so our debt and our working capital loan. Let's go ahead and make some room for those. Gonna add them below the validation checks. Just gonna add in a few lines. Okay, and let me just copy this whole header. Paste it here, and I actually don't need this total here and here. I'm gonna number this too, call it bank covenants. Gonna be my covenant. And this is going to be 3. It's going to be 4, 4, 5, 6. Okay, let's go ahead and bring our covenants from here. I'm going to keep the same formatting. Okay, and I'm going to calculate them above 2021 because you see they change, and I'm going to put it right over here. So this is going to be my budget 2021. I don't need those, and I also don't need those. What I need is I can add some checks here. Align it to the center. And my covenant calculations, just going to bring those up here. And I'm going to shorten this a bit. And I'm actually going to expand this column a little bit to make it more visible. And let's go ahead and start calculating. So our first one is our net debt over our EBITDA. So it's going to be equal to net debt, which is going to be in our balance sheet. It's going to be our short-term and our long-term debt. And remember that we need those at the end of the year. So our long-term and our short-term, which is here. And remember that net debt is calculated by debt less cash. So we need to subtract our cash. And then divide this whole thing over our annual EBITDA, which is this one here, colored in light blue. Okay, and we have 121. And actually going to copy the formatting from here to here and just remove the borders. Okay, and let's add a check for this one. So what we want here is this to be the maximum. This 1.2 that we're given is the maximum. So we need to see if our is lower than that. If our calculation is below this one here, then give me 1, otherwise give me 0. And I get a 0 because we saw that this was 121 and we need to be at 1.2. Just gonna grab my formatting from here and bring it down here, and this goes to red. And we're gonna look at how to see what we can optimize, but first let's finish the other covenants. So our financial interest coverage ratio is pretty much our EBITDA over our interest expense. So this is gonna equal to our EBITDA for the whole period divided over our interest expense. But since our interest expense is negative and I don't need negative signs here, just gonna put it in brackets and add a minus sign and pick our interest expense here. But yeah, I was just about to make a mistake. This is my interest expense for January and I need the whole year. Okay, and to get 38.6, I can actually just copy this check over here. But you see that here we had a maximum, so we checked if our calculation is below the requirement, but here it's a minimum, so we need to reverse this sign here. We need it to be above. And it's green because 38 is above 30, obviously. Our current ratio, our last covenant, is our current assets over our current liabilities. So it's going to be from the balance sheet again, and we have total current assets here. And we need those at the end of the period divided over our total current liabilities at the end of the year. Okay, 1.7, and our requirement is also 1.7, but we can just bring that down because it's a minimum requirement. So if ours is above this one here, give me 1, otherwise give me 0. So we only have issue with our net financial debt over EBITDA covenant. And what we can do is we can actually calculate how much EBITDA we need in order to meet the covenant. And let's do that over here. Gonna then some borders, and I'm actually gonna border this one as well. And this one. Okay, so our calculation here should be calculating our net financial debt over our EBITDA. we can pretty much take this calculation here, but only our net financial debt. And by dividing our net financial debt over the requirement that we have, we can get the EBITDA that we need in order to achieve this maximum requirement. So the minimum that we need to get as an EBITDA figure is this one. And in order to see how much we need, we can just compare it to the one that we've achieved so far by deducting it. And we get that we need 642,000 additional EBITDA. This is additional EBITDA required to meet covenant. Okay, I want to add some conditional formatting to this. So let's go ahead, like a new row, and cell that contain, if cell is greater than 0, I want to add some special formatting to it, and I want to bold it. I want the color to be red, and I want the fill color to be yellow. Okay. But right now, if the requirement was 2, we get a negative sign, and I don't want to get a negative sign. I want it to be 0 when no additional EBITDA is required. So the easiest part is to just get this whole thing and say if this whole thing is above 0, then is below 0, then give me 0, otherwise just give me the whole thing. Okay, and now if our covenant was, let's say, 2, you're going to get a 0, so no additional EBITDA is needed. But as a whole, it's a great idea to add all those checks and all those externally imposed requirements, because now we can see that although we worked properly and have prepared a solid projection for our next year, we're facing some issues if we present this budget to our bank, and banks usually want to take a look at the budget. Okay, now that we're done with our validation checks and our bank covenants calculations, let us look at how we can optimize our EBITDA to achieve our covenants. This is probably the hardest process you go through when preparing a budget, because you now have all those departments that have provided their estimates for next year, and you're asking them to reduce their estimate. So you're pretty much asking them to cut costs. Every department is going to try and argue that their costs cannot be cut. So let's say in our example, we've figured out that there are no options to optimize our production costs. And the only thing that we can try to optimize our selling and general and admin expenses. So we're going to go to our SG&A budget and add a new section. Let's copy this whole thing. And we're going to name this SG&A optimizations. Okay, we're going to start with 614, our admin expenses. And we can optimize two things here. We can try and optimize our wastage and our hired services. After some discussion, we have figured out that our wastage can be optimized by 50,000 per month. Or at least this is what we're going to try to achieve as an optimization. So let's copy that to the side and add a total. And our hired services for the first year, for the first period, for the first month, there are no options to optimize. But after that, we plan to try and optimize 100,000 a month. Bring that down here. And those are our optimizations from our admin expenses. let's add a total here. Total admin expenses optimizations, and add a sum. That to the side. And I'm gonna color those in a specific way because I want it to stand out. I have that, and gonna do some kind of like a flat color that's really visible. Let's bold this one, and let's copy that whole table and do our selling expenses optimizations. I'm gonna leave a bit more space here because one of our selling expense optimization has to do with sales. So I want to link my gross sales here for reference. I'm gonna color it green because it's gonna link to another sheet. And I'm gonna go to my sales budget. I'm gonna find my total gross sales and link those. And I think I picked the wrong green. Yep. Format those and copy that to the site. Okay. And the two optimizations in our selling expenses that we've discussed are transport cost and reduction of our staff cost. So our reduction of staff cost is going to start from our second month, and it's going to be 50,000 per month. Okay, and our transport, we've actually realized that the whole optimization that we can do is 500,000. And in order to have some proper room to add this, just going to add a new column here. Shrink it down a bit, and I'm gonna have my 0 period, and my transport can be optimized by 500,000. Color that blue. And we're going to calculate it as a proportion amount from our sales. So it's going to be our total optimization. We're going to fix it, divide it over our total sales, which we're also going to fix and multiply it by sales in the month. Carry that over to the right, and don't forget to change the color to black because it's a formula. So those are the optimizations that we can do. Let's have a total. Which is going to be our admin expenses optimization plus our selling expenses optimization. Carry that to the side, and I'm also going to bold it and format it like that. What we have to do now is link those in our income statement. Go ahead to our budget, go to our income statement, and for our admin expenses, we're just gonna add our optimization, but with a negative sign. Go to SG&A, administrative, and copy that for all months. And for our selling expenses, we're going to do the same. We're going to deduct our selling expense optimization. Copy that to the side as well. Okay, we forgot to change the name here. So this is going to be total selling expense optimizations. And let's see what happened in our budget. So our EBITDA grew to 58 million, and we are now covering our covenant. So no more red checks in our bank covenants. And this is pretty much the process you're going to go through. We currently did it just in one section, just in SG&A expenses, but you can do that in production. You can maybe go to your sales breakdown, adjust some early payment promotion or some commissions, stuff like that. Pretty much go through your budget and look for options to optimize. Okay, let's look at how we can add some scenarios to our budget. So let's say we want to see what would happen if we raised our sales price by 1%. This would be really hard to incorporate here. So what we can do is we can do a table with our most important assumptions and just give an easy way to change those. So right here below our bank covenants, I'm going to add a few lines. And I'm going to add a new section. Which I'm going to call assumptions. Okay, I'm going to need this one as well without the total. And I need to change all the numbers here. 7. Okay, so this is going to be our live scenario. And we're going to have a separate sheet where we're going to have all our scenarios outlined, and we're going to provide an option to select the live scenario. You can add as many assumptions as you'd like, but what I'm going to add here is sales price increase and material cost, decrease our material cost. But I'm also actually going to write them like that because you might have a favorable scenario where material cost decreases, but you also may have an unfavorable scenario where it decreases. Just gonna leave those two. You can add as many as you want. So I'm gonna remove those and just gonna denote that those are in percentage. Add a new sheet, and adding a new sheet is kind of cleaner, I'd say. So let's go ahead and apply our formatting, and this is going to be our budget 2021 assumption scenarios. The sheet name is going to be scenarios, and company name is Acme Ltd. Okay, we just make that a bit bigger so it's easier to see. Okay. And we're going to have our metric here, and we're going to have all our months. So I'm just going to go ahead, come up here and copy my header here, actually. And I'm even going to bring one of the headings with it. Let's go here. Paste that and go this metric, and I'm gonna fix it here so that if you add a lot of scenarios, you can go below. Scenarios. And here we're gonna have our selection, which is the scenario that we're gonna have selected. And below it, we're gonna have our different scenarios. So let's just copy one of those with the numbers, one of those headings, and just go a bit below, select it and paste it. And this is going to be our base case scenario. And we're going to have the same assumptions from here. Okay, and apart from our base case scenario, we're also going to have our worst case and best case. Oh, this is going to be our best case, and this is going to be our worst case. And you can add as many of those as you want. So our base case scenario would assume that nothing will change. Just have 0% increase or decrease in sales price and in material cost. And just gonna align those in the center, and I'm gonna color them blue because they're hard-coded. Our best case scenario would see 1%, just copy those here so we have the formatting, 1% increase in sales price combined with 1% decrease in material cost. So this is our best case scenario. And our worst case scenario is minus 1% in sales price and plus 1% in material cost. Copy that to the right as well. Oh, what we need now is a bit more room here, and we need to have a way to select. So just gonna give a list of our options here, and just gonna link them from here, our base case, our best case, and our worst case. And here we're gonna have our selection. Let's just color this a bit more visible and maybe even put some borders and bold it. Let's say for now our selection is 1. So this is our selected scenario. We need to have a way to get it over here. And to do that, we're going to use a form control. And here's our combo box. Let's put it here. Adjust it a bit. And let's format it. So our input range is going to come from our scenarios. So those are the ones that we'll be able to select, and our cell link is going to be our selection over here. And since we only have 3 for now, I'm just going to have the drop-down lines at 3, and that's it. So we get the option to select one of those. If we select base case scenario, it's 1 over here. And if we select our best case scenario, you notice that the selection changes to 2. So this is 1, this is 2, and this is 3. And to utilize this number to get the desired scenario, we can use the choose function. So what we can have here is choose. The first thing is our index number, which is going to be the current scenario. And we're going to fix that with F4. And the next one is what we're going to choose from. So as we're in January for our sales price increase, we want to choose either this if it's 1, or this if it's 2, or this if it's 3. And let's format it as a percentage, center it, and make it green because it comes from another sheet. The way we set up our formula, we can just copy it over to the right and to the bottom, and we can see that we have our best case scenario. And if we've done it correctly, if we change to our worst case scenario, you can see that it's now -1 for sales price and +1 for materials, and our base case scenario is 0. You can add as many scenarios as you would want. You just need to add the options here and edit the drop down to include those options. And also add the choose formula at the next scenario here. And after that, just drag it across all the assumptions here. So now that we have the assumptions here, we actually have to incorporate them in our income statement. So what we can do is we can just multiply this by 1 plus our assumption for sales price increase or decrease in January. Copy it to the right. And here for our material cost, you can do the same thing, multiply it by 1 plus our material cost increase or decrease. And copy that to the side. And now when we change our base case scenario to our best case scenario, you see that our sales changed, our material cost changed, and our EBITDA actually grew to 70 million. And if, let's say, we go to the worst case scenario, you can see that we are 17 million below the required EBITDA to meet our covenant, and we're also failing another covenant, or current assets and current liabilities. And we're also having some issues with our balance sheet check of positive cash balance, which means that if we end up in the worst case scenario, we're going to run out of money by mid-year. So if this is the scenario that's most likely, we should look into finding additional sources of finance or maybe reducing our dividends payout. And that's pretty much how to add scenarios to your model. What I'm going to do is I'm going to move that over here and actually highlight everything around it a bit so that it's much more visible. I'm going to put orange, and I'm going to put some borders, and I'm actually going to go ahead and make those borders dashed. Okay. Scenario. Oh, I'm actually gonna make it a bit smaller because it got too big. So just gonna go and copy the formatting from this here and clean this one with the formatting as well. Need to do now is just gonna merge those and center it. Okay, don't forget to bold it. And that's it. We now have our scenarios in our budget. Let's also update our table of contents because we haven't done so in quite a while. You can just go here, open our table of contents, and just make sure that we select everything, switch that to Euro, hit update, and we're done. Let's add another sheet, and we're going to prepare a summary of our budget, and we're going to make it print ready. So I'm going to go ahead, add a new sheet, zoom it up, easier to see, and apply our formatting. It's going to be summary, budget, FY 2021. And name the sheet summary, and our company, Acme Limited. Okay, let me just move it right after the table of contents. What I want to do here is I want to have our three statements. It's a three-statement budget model, so the easiest way to do that, just going to go ahead and grab everything, including the first column. So I would get all the formatting and all the totals, and I'm going to grab everything to the bottom here. Okay, copy that and move it over here. Okay, next thing, let's just extend that. Make this a little bit smaller. I'm gonna clear all the numbers that are not totals or margins. Okay, my income tax as well, and my number of items sold. Going down here to our budget. I'm also gonna clean those. And it's a bit of a boring task going and cleaning all the numbers, but it's much easier than building it from scratch, and we already have it, so there's no point in building it. Actually gonna clean everything in this column. I don't need the equity schedule, so we can just delete the whole thing. And for our cash flow, it links up above, but I'm gonna clean it anyway and make sure that it all points to the budget sheet. Okay, now that we've done that, let's go ahead and link our totals for the year. This is gonna be budget 2021. And I'm actually gonna copy it here as well, and here as well. I'm gonna link our totals, but you're gonna use the round function, and you're gonna see why. I'm gonna select our total sales here, and gonna divide them over 1,000 and round them to 0. And usually this is how statements would be presented in thousands. And once we have that, just easy to copy everything down. It should all be at the same place. Income tax and our number of items sold. And you notice here that our number of items sold doesn't have to be divided over 1,000. We're gonna clean that. But now we get our average price in 1,000 and our gross profit per item in 1,000. So let's just multiply those 1,000 and this one as well, and this one as well. And we're now okay with our income statement. For our balance sheet, let's go ahead and link. We don't have a total, but we have our balance as of December. Those are our property, plant, and equipment. Yep. And let's do the same thing. Round, divided over 1,000, and 0 digits after the decimal point. Just copy that and bring it everywhere. Okay, you see that we have one difference. This is because we rounded everything into thousands, and it's totally fine to just go ahead and it's like add it somewhere. You might leave a comment or not, but it's just fine. When you're talking about 1 or 2 or even 3, it's assumed a normal rounding difference. Okay, our cash flow. If you notice here, when we go to our cash flow, we've actually forgotten to add a total. So let's go ahead and fix that. Total, the sum of all those, and just copy it to all the lines. I'm going to carry the totals after that. And that's it. Okay, let's go ahead and carry our totals. This one comes here, this one here, this one here. Just copy those. But it's important to remember that right now this opening balance is wrong because it's taking the opening balance for December. So we need to make this, as this column is for the whole year, has to be our opening balance at the beginning of the year. And now our cash should be the same as our cash here. Yeah, it's the same. Okay, now we can link that. Budget. And go to our total here. Do the same thing, just copy those, and because it's exactly the same structure, it will be, oh, we forgot to round, divide over 1,000, and round to 0 digits. And our cash just like that. Okay. Something else that you might notice is that our cash here is 3578, and if we go up here, 3579. So we have a few €100 not aligning in our workings for our model, and that's totally fine. But we need to fix that for our presentation sheet. And what I usually do is just go into like some change in the working capital and just add 1. It's totally fine when we're presenting it in thousands. And that's our summary for next year's budget. But let's also add some perspective. So let's go ahead and add our financials for last year. What we can do is copy it here and just gonna change all the formulas. We round. Go to my financials, select my sales, and you see that it fixes it. I'm going to press F4 once, 2, 3 times so that it's unfixed and I can move the formula down. This divided over 1,000 and round it to 0. And I'm just going to paste it everywhere. Okay, and don't forget that this one is not supposed to be divided over 1,000. Move the round. Okay, and we carried those formula properly, so everything should be fine. Let's do the same for our balance sheet. This divided over 1,000 and rounded to 0. Oh, and I forgot to unfix it. So let's just delete the dollar signs. Start pasting again. And we have a difference of 1 here as well. So I'm just going to add 1 here as well. Oh, okay. Going to subtract 1 here as well. And now our cash flow statement. Round. And go to our cash flow statement. Divide it over 1,000. Round it to 0. And we forgot to unfix this one again as well. So just delete the dollar signs and start pasting down. Okay. And of course, our cash here, and you can see that we entered the cash that we began this year. And now we've linked everything from our financials file, but we don't want to have the model linked to this file, actually. So just going to go to Data, Edit Links, and I'm going to select this link to the financials file and just break the link. And this will turn all those that we just input to numbers. And that's perfect. That's what we wanted. Okay, the next thing we're going to add here is some changes. Let's just copy the formatting here, and we'll have budget year versus prior year. And we'll also have in percentage. Okay, so this is going to be my absolute change. And this is going to be my change in percentage from the starting point. Not going to bother to format those now. And you're going to see why in just a second.
Gonna put those changes everywhere, and as soon as we hit a place where both are 0 or the same and our change is 0, we see a division by 0 error, and we don't want that, so we're just gonna go ahead and fix it, and we're gonna say if error provides, just leave it nothing. So if the division gives an error, just give me an empty cell. Okay, now we have to paste those again. And that works just fine. Here, 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 here. Gonna paste them everywhere, all the way down on our balance sheet as well. I'm just skipping the rows that have percentages in them because it doesn't make sense to show the change, the absolute change and also the percentage change. Okay. Here as well. And we are almost done. A lot of pasting in this video, but it's just the easiest way to approach the whole thing. So I'm gonna get the formatting from here and put it on both those columns. Then just gonna grab this column, go to home and format it as a percentage with 2 digits after the decimal point. And now everything looks just fine. Just copy this header and put it on the other statements as well, because we're going to be preparing those to be printed separately, each statement. And that's pretty much it. I don't like all those lines, so just going to remove the formatting all the way through here. Just going to remove the borders actually. And I also want to do the same thing over here. Okay, perfect. And then the same here. Remove the borders, copy the formatting, and place it over here. And the last thing is our cash flow statement. Remove the borders and carry the formatting over here. And that's it. We now have our summary. I'm just going to remove those numbers here. And now it's time to prepare it for printing. Go to the View tab and select Page Break Preview, which is going to show you where the page breaks are going to be. So we're just going to extend that to cover our whole statement. And I'm going to limit the first page to the top right above the balance sheet, and my second page right above the cash flow statement, my third page. Let me just zoom that a bit. So the idea is that we show that this is going to be our first page, our balance sheet is going to be on our second page, and our cash flow statement on our third page. But we'd also want to have this heading here on all pages. So we can go to Page Layout, go to Print Titles, and select rows to repeat at top. We want all those rows here to repeat at the top. Okay, and that's it. We're done. We can now go back to a normal view. So we have our summary. Let's go to our table of contents and update it. Have it here. So what we want to do is add our summary. Switch that back to Euro. Update. And now we have our summary. And the best part about our summary is that we can now easily print it. But you see that now we have this table of contents link here. And we don't actually want this to be printed. So you can either just go ahead and delete it, or you can remove it from the top rows that we selected. I'm just going to go ahead and delete it. It's a bit easier. And you can see here the markers where the print, where the page are going to be separated when we print. And let's go ahead and print
to PDF. And we see our statements here. So our income statement, our balance sheet, and our cash flow statement all look perfectly well formatted and ready to be printed and presented to any kind of stakeholders. I just noticed a few things that we forgot. So this thing here is financial year 2020. And let's just copy this header everywhere. I also forgot our profit on bond total here. I'm just gonna go ahead and add the line from here. Okay, now our summary looks fine for printing. Let's print it again. You see that our model grew quite a lot, and I want it to be a bit more organized. So one of the reasons why we did all those sections is that we can now get everything within a section, go to data and group. And now we can just collapse that, and we only need to go into it if we see some validation issue up here. We can do the same for our sections. And now if we hit up here, it's going to show us our sections collapsed, and we can just go into the section that we're interested in. Let's say our income statement. And I think I noticed something here. Yeah, this is 38 million. And I believe in our summary, we arrived at 36. So let's see if we might have done something wrong. In lecture 28, we fixed this line here. And apparently we've forgotten to drag it over the total. So if we just copy that to the side, 36,964. And in our summary, it's 36,964. Let's now see how to share our model. If you remember, we still haven't broken the links to our expenses per department budget, and I prefer to leave, even when I'm done with the model, I prefer to have a working file that would have all the links intact. So if we have to go later in and change something in our expenses, it's going to be updated everywhere in the production sheet and sales and general and admin expenses. And we won't have to recreate all those formula. So one way would be to just go ahead, break that link, but this would cause an issue with that. And another way would be to send both files and ask the people to open one file and change the source to relink it, which is a bit cumbersome and it's not a great idea. So what I have here, actually, apart from the student edition, I have the full add-in that I'm developing. And here I have this save without links. You can achieve the same thing by creating a copy of the file and breaking the links in it. But what this allows me to do is grab all the sheets, adjust the name if I want to, and the location. By default, it's the same location as the original file. Just hit export, and it's exported in the same location. And if you want to learn more about this add-in, you can check it out on the first link in the description below. Congratulations on finishing the course. I hope you found it useful and you now have a solid understanding of how to build budget models in Excel. I also hope that you have gained confidence that you can start building your own dynamic, robust, professional-looking models to bring value to any company. Now that you know how to build detailed 12-month budgets, it's time for you to learn how to build strategic 5-year financial models. And that's exactly what I'll show you in this course up here. Thanks for watching, and I'll see you in there.